Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show. Hey traders.
All right, guys, welcome back to another live stream. Hope you're doing well, and good morning to you. And we've got a big one today. Today, we've got retail sales, which I mentioned yesterday, I think is probably the biggest mover that the market will see this week. This is an especially important event to me personally. Well, not personally, but for what I'm looking for in the markets right now, simply because, you know, retail sales gives us an idea of how well the consumer is doing. And this market has been seeing a slowdown in the labor market. The question is, are we going to also see a slowdown in retail spending? Because remember that retail spending is the economy, right? If people are out there and they are spending money, it's going to end up being good for like corporate profits, like big companies. You know, if Apple's out there and they're seeing a strong consumer, people are buying their products, that might be good for Apple. It might be good for, Microsoft. People are going out and buying Xboxes. Like the point is getting an idea of how the retail consumer is looking is really, really important. And so we get that data this morning to see how well or how weak the consumer is feeling. Inflation has been a persistent problem for the last few years. We've seen that, for a while. In fact, let me come right back to this. We're going to talk first about just the schedule here today. We do have a show lineup. So if you are just tuning in, stay tuned. We got a full day. We're going from 8:15 through 11 a.m. I believe we'll probably end around 11:30. We've got a new guest, Nick Phillips, coming on the stream, which will be fun. You got a whole bunch of regulars and a relatively new one, James from Elite Traders is coming on as well. So we got a very busy day in terms of a stream schedule. So stick around. It's going to be a fun day. I invite you to keep the stream up all day. Help us out. If you just want to leave the stream up while you hang out or while you trade or while you're doing whatever, we appreciate it. It just helps with the YouTube algorithm. Speaking of the YouTube algorithm, if you could hit the thumbs up button, it does really help just to support what we're doing here. Try and get the word out. Good morning, everybody. Hey, Web Trades. What's up, Jason? Hey, Ivan. All right, let's jump into some stuff. So again, we've got retail sales here this morning, which will be important to this market. It'll be important to the stock market, which has been, ripping higher off the prospect that, rate cuts are coming and the companies that are in the S&P 500 are just, there's just a couple companies in here that are just killing it. Specifically in like the NASDAQ. The NASDAQ's just been a monster performer, and we can click through some of the companies and why. NVIDIA is a huge holding in the NASDAQ. Apple is a huge holding in the NASDAQ. Broadcom, AVGO, is a huge holding in the NASDAQ. And look at this beast, the Broadcom Rally, which is another semiconductor company. I mean, you've got NVIDIA doing its thing. Well, here comes Broadcom. So you got two huge semiconductor companies dragging the NASDAQ higher. And I'm not going to lie. I would be lying if I said that this doesn't make me a little bit nervous about this rally. It's being led. It's all tech and semiconductors, which is that a bad thing? No, I mean, those things are in high demand right now as people are getting all hyped up about AI. But I just keep coming back to the problem that I see with this market. Look at the Russell. This is small businesses of America are flat since 2020, right? There's been no gains on the Russell since 2020, late 2020, but still, my point was showing you that is that here you go. You got a couple companies, not a couple, but a sector or two, semis and technology that are just flying high, and everything else is just not particularly impressive. It does make me a little bit nervous about the rally. Again, I would love to see. I was really, really bullish on the stock market going into the end of the year. Now, again, I should have, coulda, woulda just held the whole way through. I did buy back in, and I have some positioning as of the April pullback. So I haven't missed this rally. I was long over here until about this area, and then I was long big time here until about recently, where I cut off my positions. So I've caught a good chunk of this rally. But what makes me so nervous about this is that I liked this portion of the rally because rates were falling, yields were dropping, and it looked like we were finally going to get, rate cuts in tandem with a strong labor market. During this time, you had the Russell sweet spot, and I was pumped about it. I was really long the Russell. I was long the S&P 500. I was excited for the majority of companies, and that's when I love to be buying stocks, is when most companies look attractive. What makes me so nervous right now is that only a small portion of the stock market looks really strong. Tech and semiconductors, right? The chip making companies. So without getting too far down that rabbit hole this morning, we do have retail sales, but I just want to reiterate that I am not adding or buying aggressively on the NASDAQ at this time. I am looking for pullbacks. I'm looking for a broadening rally, which I think could happen, but you need to see labor data stay relatively strong with inflation come down. That's what I need to see in order to be really bullish the stock market. So we may have some hiccups along the way. We may see some pullbacks, in which case I can be a buyer. I can add to my positioning. But for now, when it comes to the stock market, I am on the sidelines and cautiously watching. The dollar index continues to hold its gains here above resistance here at the 105.2 level. As we go into these retail sales numbers, this is going to be very important to the dollar index. The dollar index, of course, again, when it comes to retail sales, strong retail sales, a strong consumer would be bullish for the stock for the stock market, but also for the dollar, right? Remember that a strong consumer means more spending. More spending means more tax revenue, more activity in an economy, more activity in an economy is very good. So the point is here, if you're watching retail sales, we want to see a lot of strength in the retail sales number if you are bullish on the dollar, or really, I think, arguably bullish on the stock market. The stock market might not love it in the short term if you get strong retail sales, because they might say, oh, that's inflationary. But I think strong retail sales are a bullish thing for the stock market, even if it causes a short-term dip. So we will see. Again, we're coming into that data here in just about 5 minutes. We're going to continue to take a look at some more charts as we get closer to the release. So again, the dollar index from a technical perspective looks healthy. Let's see if you get cool retail sales and price comes down, how does it react at this 105.2 level? And if we get strong retail sales data here this morning, can we break through, and can the day traders take it back up to 106.4? That's the question here, I think, you have for the dollar. So if you are now, now that we've talked about the daily chart, if you're looking at the dollar index on a 4-hour chart, you've kind of got this level of support. We'll go ahead and make this a 4-hour demand zone. So you have this this kind of 4-hour chart level here. It's a wide zone, but we're sitting right on this level. And the question is, are you going to get a break through the highs, or are you going to get a break through these lows? And again, I don't know, because I don't try and predict what economic data is going to come out as. But what I do pay attention to is, if you get strong retail sales, can the dollar continue to hold its gains, bounce, and rally? And if it gets poor data and we see the dollar sell off, can it hold those downside gains for the bears, right? If you get something like this, really strong breakout for the dollar, my opinion, if it can close above this level of resistance, my opinion would be probably continues to drift higher. And you could probably look for pullbacks. Now, of course, do what you want to do, trade your own strategy. I'm not here to tell you what to do with your trading account. This is what I am thinking and what I'm doing in the markets. As always with these live streams, this is not financial advice. Please trade carefully. People lose a lot of money in this every single day. And over the years, I've watched so many traders come and go to these shows. So please understand, most people lose money in this stuff. It's really hard. And don't take anything I'm saying as what you should do. I'm sharing my thoughts. Okay, so the other thing with the dollar here is, what about if you get a bearish candle? What about if you get really poor retail sales here this morning? Again, I don't predict this stuff. I don't know what's going to happen with retail sales, but what if you get something like this? Again, in that case, the dollar may find its way back down to the bottom of this range this week. May not be right away, but if you get a big red candle here that kind of disappoints on retail sales, the dollar could trend back down to the lower levels here. So I think for the dollar index, you have some levels here in terms of price action that I think price would, if it's going to start trending one way or the other, some targets, some magnet levels, if you will. That 106.4 level on the 4-hour kind of resistance level here, and on the 4-hour support level around the 104.2. So I'm watching for breakouts here. We'll come back to the dollar index and talk about that. We are just about 2 minutes out from the data. Let's take a look at gold here on the 4-hour chart. Gold, really choppy recently, has not made much of a directional move either ways. You've got a big drop off here, but we are very range bound right now. Same kind of thesis for the gold market. If you get a strong dollar today, gold may break back down to these lows. And the question for the bears would be, can you actually break the 2290 level? That is the question for the bears. And for the bulls, if you get, a nice retail sales number that comes in real light, right? A miss on retail sales would likely cause gold to get a little bit excited. And the question would be, can you break through that 2335 level? So range bound markets to go into today, which is fine. I think we just look for signals of a break one way or the other. So that's what I'll be looking for on gold, the dollar, the S&P, the NASDAQ. We've hit a lot of them just here as we get close. So I'm going to go ahead and switch over to our all markets view so we can look at all of the charts at the same time, just to get a reaction to these numbers. Just want to ask a quick favor of you guys. If you're enjoying the show, hit that thumbs up button, support the show. We appreciate you hanging out with us. And again, we are coming into retail sales here in about 40 seconds to go. You've got your indices in this area here. The dollar index is here, euro, pound, gold, and oil in the bottom right. So there's all your different charts. You can see the reaction. Just keep an eye on the screen. Here we go. So retail sales coming in, about 20 seconds to go. Let's go ahead and roll our breaking news. Okay. All right, just a couple seconds to go here. Let's see if retail sales does anything this morning, or if it's not a big exciting event. We'll see. All right, retail sales coming out here. Seeing a little bit of a push here on gold. Seeing a push on the NASDAQ. Dollar index is lower. Dow Jones and S&P are slightly higher. Let's see what the number is. All right, and there's our retail sales number. Came in lighter than anticipated. You had a number here that was forecasted to be 0.2% on a month-over-month basis, so 0.2% growth in the retail sales for May. Instead, we got a 0.1%, so a slight miss on the retail sales. Retail sales ex autos, which is an interesting one as well, we're expected to grow by 0.2%, and extracting the automobiles out of the picture, you had a minus 0.1% growth. So little lighter print than anticipated. And let's go back and talk a little bit about what we discussed earlier in how we thought this might impact the charts. Let's switch over to our full screen here. And here's the dollar index. Again, dollar index is moving lower, but we're back to exactly what we were speaking about moments ago. Now that we're back to this level of support, how does the market react? You've got the dollar index coming lower, but can it actually break out? Do you get a candle that closes like this, showing some bearish strength? Or does this bounce back right away and not really make a follow-through move? That's the question here as we go into the next or the remaining trading day here. So we're going to watch price action to see if you do in fact get a strong enough break underneath this 105 30 level, let's call it. Same thing for gold. We talked about gold earlier, but the question now is, can gold actually get, enough momentum here to break through some levels of resistance? If you're looking at the hourly chart, you've got 23, 25, let's call it. Can price get up there? And more importantly, can it actually break that level and start getting us some directional bias on gold? Gold has been very much, back and forth. We need to see, in my opinion, we need to see some some decisiveness one way or the other. S&P 500, again, if you take a look at this chart, you've got more flag looking patterns. It's been day in, day out, same setups over and over on the S&P 500. And I admittedly wish I had caught more of them. But again, ranged here at the upper and lower levels of this 1 hour chart. The question is, for the bulls here today, can you see a break? Whoops, I messed that up. Hold on. Can you see a break above or below this level? So again, range bound on S&P. You've got, let's see what else you got. Dollar index. Let's go back here. 4 hour chart. Again, keeping an eye on this lower level of support. If that breaks, you probably see things like the euro and the pound continue higher. Dollar yen continue higher. How's that impacting dollar Swiss? I am short dollar Swiss. Look at this. Here we go. Dollar Swiss trade's moving nicely. Guys, I'm going to go ahead and trail my stop on this. For those of you who are inside of the VIP room, we've got a nice signal going here. Give me a moment. I'm just going to trail a stop on this position. There we go. Dollar Swiss finally making the move we've been looking for. Give me a second. I'm just going to trail my stop loss here. So we're going to trail it right there. Let me give you guys a level here. 89.05. So 89.05. Let's go 89.05. All right. Yeah, real nice move here on dollar Swiss. I'm going to go ahead and trail my stop loss. So my initial trade has moved very nicely in profit. What I'm going to go ahead and do is I'm going to update members inside of our VIP room. While I'm doing this, if you guys have not already heard, we are currently doing our biggest discount of the entire year for VIP room status. If you guys would like to come trade with us, all of the trading signals that get shared by myself, by Frank, and Ivan when he shares some of his as well, all of them get shared inside of the Discord room. If you're not already in here, come join us. It is currently half off. If you're not already in the group, what we're going to do here is we'll drop a link in the chat. While we are speaking, while I'm doing this, if you could just click the or drop the link there, Chandler, for us. Click this link. You can be connected to a real member of our staff, so you'll be chatting with a real person. If you'd like to join the VIP room, again, it is currently half off to get access to our signals room, coaching webinars, the chat room, and so much more. If you've been a fan of the channel for a while, this is your chance. No question. Take advantage of it. It is half off right now. It's our biggest discount of the entire year. So we do it once a year for the VIP room. So VIP status, like I said, biggest discount of the year. We got some great trades running right now. Dollar Swiss is running hot. So I've just trailed, like I said, trailed a stop loss on this one. And I'm just going to go ahead and update this for members. Okay, so let's just write this up. Whoops, didn't mean to do that. Let's get out of that and let's just pull up. Here we go. All right. Okay. And there we go. All right. Dollar Swiss update is in. again, took this trade a couple days back and just been holding it through. Man, it's moving nice. This is great. Nice little push lower. Again, cooler than expected. USD CHF is going to move lower on that, down 0.4% on the day. This is after already seeing some good moves, and yields are dropping. This is great for my TLT position, and we are actually running hot today. We've got gold moving back up, very nice. TLT, we're in nice profits on this trade, and USD CHF back-to-back winners right now. I wish, man, let me be transparent for a second. I wish I had this many good trades running at the same time all the time. But we have just been on an absolute tear this year. 2024 has been already, it's close to my results of 2023. So we'll keep it up to the best of our ability and go from there. Again, if you didn't already click the link, we'll drop the link one more time. We are doing our 50% off sale for the year on VIP membership. If you'd like to come join us, come trade alongside myself and Frank and Ivan, the link's just been dropped in the chat. Boom, there it is. Again, 50% off. When you click that link, just to show you what to do, click that link, click chat now. VIP singles membership. This is ending soon. You actually, if you're watching with us live right now, you can actually get 55. So click that link, chat with us on the site, and you can actually get 55% off the membership. It is a massive savings. All right, let's push on. Let's see what else is moving. The VIX is lower today. Let's see, stocks flat, NASDAQ flat. That's kind of what I would have expected. So, and I'm not just saying that with hindsight. Retail sales, you have some push and shove here. Retail sales being good, retail sales, how does it impact stocks? Well, you might say, well, strong retail sales are good for stocks, right? Well, yes, because business profits go up if the consumer is strong. That's true. But it also, for stocks, would mean a negative thing, which is the Fed may not cut rates. And so I think the final result for NASDAQ is neutral. I don't think, unless you had really strong or really weak retail sales, it just wasn't going to move the NASDAQ that much. But what will it move today? It will move yields. It will move gold. It will move TLT, because those places are more, just straight up transparent. And what, this is one of the reasons I really do like trading gold, is that this makes sense fundamentally. Okay. Retail sales going lower is a double positive for gold. Cooling in the economy or cooler, like a weaker consumer is bullish for gold, because people get a little nervous. If the consumer starts to slide, that's a sign of the economy starting to slide. That's bullish for gold. That's one. But what's number two? Number two is that if the consumer is starting to slide, it may mean inflation's going to start coming down, and inflation coming down means rate cuts. Rate cuts, bullish for gold. So I think what you've got here today is a great report for gold. This is going to be a positive day for gold, I think. We'll see. Anything can happen. We positive in the sense that from these lows, I think you probably hold those lows for the day. If something drastic changes, and it could, markets can be crazy. That is possible. But in my view, strong probability that's the low of the day right there. Because again, that's a good report for gold on both fronts. Inflation data could be weakened or cooler based on a softening consumer. So I like this. I like this story. Now, from a technical perspective, where are we at? Again, we're just bouncing off support. The trade, I think, was down here. There's not really anything right there to do. If you're a scalper, if you're trading a 1 hour chart or something like that, maybe you trade the break of this level, but not really my cup of tea, not really what I'm doing when I trade. For me, I'm more of a swing trader. So, the level would have been like here or here, obviously with hindsight. But the next level, I would say, is if you can get a break through these highs and you get a nice continue to push higher. What's the results so far in the VIP? Hey, if you'd like some details on our past performance, please just chat with us. You can send a direct message using the link in the chat or in the description, and someone from our team can get you that information just so I can push on with the stream and just keep doing my analysis. But if you'd like to speak with someone, that is why we have staff on duty who can help you out with the service. One thing that you should know about the VIP room is that a lot of times traders will in their VIP service, they'll never show you a real account. And to me, that's not cool. When you join our VIP room, what you're getting is when I share my trades, they are on live accounts. I'm putting my own hard-earned money on the line with every trade that I take. I show you my accounts regularly. I show you if I'm going through a drawdown or a profit. If that transparency is something that you feel like you've lacked in past purchases, I'm telling you, the reason we are different with what we offer is transparency. I go through losing streaks. I go through winning streaks. Things are good sometimes, things are bad sometimes. Right now, they've been red hot. Things have been so good. So I share all of the trades. I share all of I show you my account, my P&L all the time. If I'm losing a trade, I'm losing real money. If I'm winning a trade, I'm winning real money. No nonsense, no demo balling, no fake profits. Again, that's what you get when you join our VIP room. And if that's something you're interested in learning more about, again, don't waste your time on signal services or copying and trying to take the easy way out. If you're serious about this stuff, join our channel because again, it is real, no nonsense trading. So come join us if you have not already. Again, it's 55% off while we are live streaming right now. You can find more information by clicking the link that's being dropped in the chat right now or at the very top of the description if you're watching this recording at a later point. Your dollar Swiss trade runs really nicely. I took the trade too. Thank you, sir. Very thankful for the trade idea shared in Discord VIP. What's up, Annie? Thank you very much for the kind message. Yeah, dollar Swiss is moving nicely. It's moving nicely because we've got yields dropping. This is a nice start to the day. TLT is also really making a nice. We bounced off support for TLT. This is great for the trade there. I am long TLT, short USD CHF, and long gold. So all three trades are making some gains this morning, which is great. In terms of dollar Swiss, as I mentioned, I just trailed this in the room. So trade update here, trailed the stop. We're floating around 81 pips, which doesn't sound like a lot, but for dollar Swiss, that's a good move. And at the same time, we've now trailed stops. We've locked in about 30 pips of profit there. So we'll see. Again, a cooler than expected retail sales print is good for dollar bearishness right now. But we have something to prove here with the dollar because the dollar has not quite made, here's dollar, you can say like dollar bearishness, but we've still made really great gains recently for the dollar. This market, has room to pull back here going against my own, dollar bearish thesis right now. It has room to come back and find support and continue higher. But I'll just continue to manage my positions as I am, trailing stops. If this market, if the dollar does one of these where it pulls back and then it rips through, that will probably trail me out of profit for some of my positions. And so that would be fine if it happens, but we may also see, retail sales data comes down or brings the dollar down here. And, we may range bound, we may break back into this zone. I don't know. Right. So I'm kind of just right now, I'm just trailing stops and managing trades that I have on. Again, like I said, long gold, I'm long TLT, and I'm short dollar Swiss. So couple trades running nicely here right now. Part of the reason dollar Swiss specifically is a trade that I took is the Swiss franc is what is often coined a reserve or a risk off currency. And I am a little bit cautious right now in the markets. I think that the hype in the stock market is a little overdone. I think that you may see a pivot into risk off. And you could say, well, the dollar is risk off. But yes, but I think that the Swiss franc in a true down market will outperform the dollar. So the Swiss franc is, again, it's the banking reserve of the world. So we will see. And I like the setup, so I took the trade. Trade was also, it's still on there. We have this very bearish reading on USD CHF. Again, most things on the Edge Finder lining up for Swiss franc strength, which is a rare signal. I've not seen this much CHF strength, but it's working out nicely so far. So we'll see how that wants to play out. Again, gold still getting a nice reading, and my TLT trade, very bullish reading, is from this US 10-year Treasury bonds, very bullish reading. So we'll keep an eye on that. Can you look at USD/JPY? Yes, in just a moment, we'll be joined by the man himself, the yen trader. It is Ivan FX. So stay tuned. We'll be right back after this short break, joined by Ivan to take a look at some more charts and talk some setups. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with, as I mentioned, the Yen Man. What's up, Yen Man Ivan?
It's all right.
So what's going on, Ivan? We had a retail sales number that came in slightly lighter than anticipated. What are you watching here today? What are you? What's on the radar?
A bit of nothing and a bit of everything. I'm a bit on the pound. We have a rate cut coming in probably on Thursday. The strength that Swissy, you just talked about Swissy, is probably coming in from a higher, not higher than expected inflation, but not as low inflation as 1. It's not 1.4. So that's probably the reasons why you would see maybe it's a softer tone, a bit harsher tone maybe from SNB on Thursday.
Okay, so wait, you had last Thursday? I missed that.
No, it's 20th, so in 2 days.
Okay, so it's coming up. Got it. Yeah, I've been interested.
Scroll.
It's down here. Okay. Thursday, CHF, interest rate decision, exports, imports,
and then
press
Bank
conference
of England later. Yeah.
Okay, maybe it's another day, but I see what you're saying. So you have the Swiss National Bank coming up on Thursday. That could be interesting. They've been I haven't really followed too closely the Swiss franc. There's, I follow mostly the US stuff. What is your take on this recent kind of Swiss franc? I was looking at this too. CHF JPY. Look at this thing. What's going on here? Just a straight shot. Swiss franc strength. What's going on here, Ivan?
I would like to say it's easy and we can see it in advance, but I think it is inflation rate differential. Japan never got what they wanted in terms of higher and higher inflation. Inflation came down again.
Yep.
Swiss got a bit of more inflation, but also Swiss has been incredibly weak. So I feel like this is just not necessarily a comeback, but more like a punch back. You bullied me so hard that I'm getting back to you.
Sure.
And you will see that on other pairs, but yeah, unbelievable, and I'm not in that move.
Yeah, I wish I had the Swiss franc yen trade here. I mean, this thing is running super smooth. That's a lot of green on one chart. What about the dollar yen? This is interesting. You're back up here, as you mentioned, Ivan. They've been looking for progress. They've been looking for some sign of positive inflation and economic growth. And yet, here we are. I feel like we've done this same story 37,000 million times, Ivan. We're back to, here's this big level of resistance overhead, 158. And excuse me, but every single time this happens, it pops way through that level and just runs again. Is that going to happen here? I mean, we are at 158. Yes, you're seeing some signs of rejection, but I just have a hard time trying to call a top here on this dollar yen thing. It just keeps going.
Yeah, I don't think it's good. I don't think it has the legs, to be honest. You need more dollar strength. And what you have seen, I've been drawing lately, not lately, because it has just been a bit of a wild ride. Been a lot of ups and downs. FOMC, in my view, didn't give us a very clear direction. There seems to be some dollar strength coming in. But I think it's more of, I don't know, offsetting summer. Also, we're going into summer, finding something more safe, slightly, not a big move. Just to be safe, because what has happened to, is it ATR? So average daily volatility, like it has slowed down, like on the yen pairs as well, on dollar pairs. Like I feel like we're not moving anywhere. So
Yeah.
the volatility has just reduced. And then Royal says, "Why do I sound like Kermit? Because I'm sick."
Well, you still sound great to me, Ivan, but that I totally agree on the volatility stuff. The VIX has been, I mean, look at this VIX. This is I remember pre 2020 in the currency world. I was watching currencies a lot during that time, and pre 2020 it was kind of like it is today. I mean, I remember in 2018, 2019, volatility was very low, and at the time people were saying the same thing. Hey, remember 2010, remember in 2009 when NFP would move the markets by 150 pips, and nowadays you get, like, you're lucky if you get 50. And that, I remember that being the case. And traders who are watching the currency market as well as the futures market and in commodities and indices or stuff, volatility is interesting, because when you get these very low prints, there's not a whole lot of move that usually happens. And then we saw 2020, volatility came back. We saw it, kind of ramp up again in 2021, 2022. And now we've just trickled back down to a period of very low volatility. And that carries over into the currency market.
It reminds me of another asset that we have been looking at. I don't know how correlation is, but GameStop.
Yeah. Let's talk about GameStop. Look at this. It took a huge dive yesterday. I saw it was down 14%. And this one is I don't even really have an opinion on it. It just shoots up every once in a while, and then it just seems like it's every time it's a sell the event kind of thing. But I don't know. Yeah, that one's, you're getting some mania, I think, coming back coincidentally right at the same time that the NASDAQ is, flying. So I don't think that's a coincidence at all. I think that hype comes back when stocks are flying high, and then it falls out the window when stocks go back down. So I don't know. What are your thoughts on the indices? Can they keep going like this, Ivan? I mean, look at this daily chart on the NASDAQ.
I want to give you a serious answer, but I don't have one. Because also in my world, in what world am I, and why am I wrong? In my world, we probably should have peaked May or June in terms of volatility, or so in terms of going higher and higher, because we have been going higher and higher. Is it throughout 2024? I feel like it's just been a bullish move ever since. Yeah, we haven't had a meaningful pullback, and like we should be like, okay, when are we going to say, hey, this is enough?
Yeah.
Because the market does that sometimes. It is like, okay, it's enough now. Okay, let's go into a range. Let's have a pullback. Let's do other things than even just, because what is driving this? It is the lower inflation that leads, or at least a bit lower inflation. That doesn't lead to, at least at bare minimum, higher interest rates, and that drives business. So it's an easy kind of thing to say, oh, I understand that, but it's a bit annoying at this point because I want it to come down. But that's the driver, and it's relentless, to be honest.
It's tough for me too, because I look at the NASDAQ particularly, and I see here you are having just every day fresh all-time highs, and it makes me nervous because at the same time that we're having fresh all-time highs, we see the labor market showing signs of slowing, and inflation, there's some prospect of it coming down, but it's all just rumors still. I mean, look, before you get super outright bullish on the stock market, my caution is that if we switch over my screen for a second, here is inflation over the last year, and you can see it is pretty much flat. Like, we're not seeing the progress of lower inflation going forward. And at the same time, what makes me nervous about stocks being so bullish at the same time is job openings are coming down. And I've gone through this many times on my videos and stuff, but we're seeing the labor market show signs of slowing, but at the same time, inflation has not started a trend lower yet. And so that combination makes me a little bit nervous about stocks. And again, for stocks to rip higher like this, what I would have, if you'd showed me this chart and said, Nick, what made us do this? My guess, without knowing the data, would have been jobs data hanging in there, but inflation coming down, because that would have been a prospect for, in my view, a straight move higher. If you had jobs stay strong, but inflation started to come down, that would have been strong. But we're not kind of getting that. We're getting inflation sticky plus labor market slowing. And that's my thought.
Okay, let me poke some holes in your theories. I don't like your theory because
okay, I'm ready.
We are 3.3, right? 3.3. I think inflation was. PPI is 2.7, and CPE was. Is that
PCE? I think it's 2.2.
2.7 in PCE. PPI is 2.2, and then
2.2.
So we are. You say sticky. What is 7? What is 9? What is 10? What was it? 9 point something. That's high inflation. So we have come down considerably, a lot, I would argue. So we are a bit, a bit too high, a bit high on the throttle. But in my mind, we've come from far. And yes, you can micromanage and say we are higher, we are sticky. We are sticky at 3.3, but it's still, in at least you can see from more than one economy, that's not a very far away from being 2. So if you say that we have reduced the pressure, we are not that we're not a bubble that's about to burst like at any second, but we are. It's a bit hot. Like, you don't need air conditioning, but it's a bit hot in here. You are confident enough to do work and continue moving forward.
So here's the thing too, Ivan. I can also add to your idea with somebody pointed this out in my chat room, which I thought was worth mentioning. They also pointed out in combination with what you're saying is that yes, jolts are coming down, job openings are deteriorating, but they're still above pre-pandemic levels. So you could make the argument that the labor market is cooling, but it's not yet, crashing. It's just normalizing. So you could make the bullish case for stocks in that case as well. So that's another reason that I could be wrong. But I would push back on this idea that inflation is not, too worth watching at 3.3, with the idea that this is the margin of error from our 2% target. We are still 65% above. If you take the 1.3, that's the 3.3% inflation. We're 1.3% above our target. That is 65% away from our target of 2% inflation. And the reason I bring that up is that is a big enough increment that if you continue to see that difference in the inflation target and what we actually are working with, if that grows or if that stays at that level, the Fed will start to look to keep things restrictive or maybe even, reverse course. I don't think that that's likely, but at the very least, they may hold where they're at for a suspended period of time, which can continue this trend lower, and we could break those lows. So I'm not saying I think that, we're going to have a hard landing per se, but I am, raising red flags that if we don't see inflation start trending lower soon, the probabilities of a recession greatly increase. And that's not just my thoughts. That's from the Fed themselves. They just raised their target or their expectations of a possible recession. They raised it up to a 52% chance in the next 12 months that we could see a recession. So my concern is that if you don't see inflation start trending lower, we may be on a dangerous path. That's my concern. It's not I think the market's entering a recession. I think probabilities increase the longer we don't see inflation coming down.
I can see that, but I also tried to not blow your mind, to not change your mind either. But I'm trying to get a perspective of the labor market never exploded. The labor market never went off like inflation. And on the opposite side, in labor market never, it has changed, but never imploded for that matter. It never had a significant change in jobs after inflation coming down. Because why does inflation come down? Because demand is bad. Demand is going away because people don't have enough money or doesn't want to spend the money. That's why businesses in the end has to decrease their prices.
Sure.
And this is just the who is Hawks and who is Dove. That was the question from James, I think it was. So yeah, there you go. So that is updated from 30th of May. Most of them are still, is that hawkish? Yeah, most of them are hawkish. 4 of them are dovish, and Powell is slightly on the more hawkish side. That they are, well, you can call them pausing in a way, but they're not ready. They're not wanting to do anything whatsoever in either direction. But yeah, what was I supposed to say? That in general terms, we haven't had what recession was projected. Was it last year or this year?
2023, yeah.
Yeah, last year was supposed to happen. Never happened.
Yep.
So we need to be independent. We can't call it a recession, even though it's very funny to make a YouTube video about it. We don't have it.
Yeah, it's true. And the expectations for recession, they kind of always come and they go. And sometimes they're right, sometimes they're wrong. I think that they got it very wrong. Everybody got it wrong, it seemed like, in 2023. And then here you go. You've got it's kind of flaring up again. Is that worth paying attention to or not? I don't know. But I think that what is worth paying attention to is simply the same data that the Fed, we talk about it day in, day out. We want to see, for this market to continue higher, you want to see inflation coming down. And more importantly, to the stock market specifically, I think you want to see participation from other areas. I've talked about this a lot. You've got the Russell, small cap companies, the small business of America are not doing particularly well. It's really just the technology names that are really carrying the whole thing. And I think that if you're going to see this thing not roll over and fall apart at some point, you need to see participation from the broad market, all of the companies, not just a tiny portion of them. So we'll have to keep an eye on it. We'll continue to, what do you got?
One last thing. I'm trying to tell you that the market has decided, based upon this graph, is that we are now confident enough to trade higher and continuously higher and without going choppy. So they have what they call sufficiently enough confidence that there is going to be profits going forward.
Yep.
Regardless of current situation.
And that's the thing. It is priced for corporate profit growth. It's and it is okay. Is it okay that this market is led by just a small number? I think that in the short term, yes, but in the long term, you need the rally to broaden out. You can't have forever, most companies hurting and just a small, tiny portion, because why? Because the big companies are built on, their profits are built on the smaller ones. So if the smaller ones don't start to improve their conditions, you may be threatened by a kind of, the one thing too is that you take a look at the top 4 stocks of the NASDAQ, and 2 of them are semiconductor companies, Broadcom and NVIDIA. Those 2 companies are selling semiconductors. They're selling pickaxes to the gold miners, which are the rest of the companies. If there's not that much gold to be found, after all this is said and done, there could be some serious, ugly repercussions. But there may be some gold. It's kind of like the internet. When the internet first came out, everybody rushed to buy pickaxes, and companies that were, building out the internet made tons of money. But then there was, in the short term, in 2000, 2001, people realized there's not any short-term profits out of the internet. It took many years to really profit from the invention of the internet for the average company. So I think that the long-term effects of AI and semiconductor, booms will be realized. But in the short term, it's a little rocky to me. So that's kind of where I'm cautious. I'm not bearish, but I can't touch it up here. It would have to give me a pullback in order to take the risk.
Okay. Interesting. Are you chicken? Are you afraid? Are you scared?
I'm a little scared. Yeah. I think, it's the old Buffett saying, be greedy when others are fearful, and fearful when others are greedy. I think it is okay to say I'm a little fearful of that move, and take my time on it.
It's okay. Yeah, I agree with you. I'm not buying there anyways.
Yeah. Yeah. I think, at this point, even if you're bullish, even if you're super bullish, I think it's a little bit rough to try and chase the highs there. I think, even waiting for a modest pullback is more appropriate than buying up there. But we will have to see. I think we have another. Do we have another guest coming on? We have Kenzo at 9:15. So Ivan, we got a couple more minutes. What other charts are you watching here today? Are you watching any other currency pairs?
Oh, I thought it was done at what do you call it? 3. So was it your time?
9. Yeah. So 7 minutes ago.
9. Yeah.
No, we got a couple more minutes if you wanna hang out. You're welcome to leave if you hate us now.
No. I had a couple questions. No, I see chat. So chat said, ask earlier, what's my view on yen? I think there's nothing has changed on yen currently. The market kind of tells me that we are in a range on most of the pairs, I would argue. That's just a sum of volatility. I read an article today from, I think it was Westpac, that mentioned that the normalization of the monetary policy of Bank of Japan has to be postponed, and not yet. And that's a very easy peasy lemon squeezy thing. It is inflation, and it didn't go crazy. It went back to, I think it was 2 point something or 3 point something. That is not 2 point something. It's not high enough. It's not crazy enough. It didn't do what the Western countries did. And then they're also very, what do you call it in English? They're very, not afraid. They're very linked to oil. So oil price going higher is a good sign to this, but it has already also gone down a lot. So I didn't know it went down to $73, but that is not helping them because they are 100% dependent on importing oil.
Yeah, I was going to ask you about oil too, Ivan, just because oil's been it's been an interesting one to watch. As I was mentioning earlier, with like sectors that are performing well or sectors that are performing weak. If you take a look at like XLE in the stock world, at least, that's an area that's been weak. You've had oil kind of profits for companies performing poorly, but I'm curious, what your thoughts are on crude itself. Again, it seems like it may have put in a low around 72.8. What do you think? What do you think happens with oil?
No, and now there is an article I should know on the top of my head if somebody can find that later. But I think there was an article about Saudi saying that they're going to continue cutting for the rest of the year. I think that was just a discussion, but I don't know if that was actually
cutting supply.
Yeah. Yeah. That would send this one a bit higher. And then there's been a lot of talks about the deal between Saudi Arabia and America about the dollar purchase.
Oh, yeah, the petrodollar thing.
Yeah. I'm like, okay. It doesn't really bother me. BRICS doesn't bother me. So in terms of Saudi, in terms of oil, I think that this one is going to have a bit of a harder time going higher. So what's the drivers? Currently, we have the production in Saudi. maybe going lower, then that would increase the price. But on the other side, you have not increasing inflation. You have a bit high inflation, but not enough inflation, and especially China needs to get going to get oil to go higher. So for me, I think overall there is pluses and minuses, but after all, I think it's going to be a bearish going forward for the rest of the year, because there is not enough activity in the major economies that uses oil.
Yeah, and that's it's so interesting to me too with an election year here when it comes to oil. You have some forces at play. As you mentioned, Saudi Arabia has the desire to increase the sale price of oil, because of course, if they can raise the price of oil, they make more money. But then I saw, this is kind of interesting too. Side note on that is they want to sell it higher, but they don't want to price it too high because they know that if they price oil too high, then it will hurt the economies of the world and the demand for oil will actually weaken. So there's like this sweet spot. And I think that their sweet spot is like 80 to 90 range. So Saudi Arabia has an interest in keeping oil somewhere in this area because they can make kind of their max profit, which makes sense for them. At the same time, you have elections in the UK, you have elections in the US, you have elections this year, and the US has a vested interest. If you're Joe Biden, you want the price of oil to be lower. So you have these two forces. Why would you want it to be lower? Well, because if you're trying to collect votes, and I'm not saying anything bad about Joe Biden or Donald Trump or anybody, if any one of us was the president, you would want to do this too. You would want to keep fuel costs at the gas pump low enough that it doesn't hurt people's opinion of the current administration. Because if everybody, there's one way to really make people mad across the whole world, and that's high oil prices. People hate when they have to go pay a bunch of money at the gas station because it just feels like, hey, I was paying, a lot less for this a month ago. So anyways, there's two forces there, and it makes for a very interesting year with again, Saudi Arabia wants prices up and administrations want prices down. So we'll have to see what I think the big one is to continue watching oil production in the U.S. as well to see how that affects it.
But also, do you need to have like a hurricane season now? So you have to reduce production probably in the Mexican Gulf. Slash down there. But for my screen, I've typed out supply and demand, if possible, to read. That like oil market is the most supply and demand driven market that I know that we can trade and then also risk. There's one question from chat from Russ earlier. Do you get my jokes, Nick?
I do get your jokes, Ivan. I love your humor. I'm oftentimes scared by your humor, but I do love it.
Why are you scared of my humor?
A long time ago, you told me that Norwegians are very straightforward, and I can say that is very true. Your humor is very straightforward, and I appreciate it. I actually really appreciate it because sometimes it's hard to read people, but I feel like I get a clear answer from you usually. So I get his humor. I just have to stay cautious because you never know with Ivan. But I'm kidding. Ivan and I have done this for a long time together, so I picked up a few things about his humor over time.
Yeah, and this one is not planned though, but I remember asking you if you could dance, and then you had made like a meme, sort of like a short video or something where you were dancing.
Yeah, I'm not a great dancer, I'll say that. I wish I could dance. It'd be a cool skill. Every time I go to weddings, I'm like, okay, here's my moment to improve at dancing. But I don't know. Anyways, another thing too here, Ivan, that I noticed is yields are down today off of this retail sales number. Even though the stock market didn't move that much, the dollar did, and yields also did. I thought that was kind of interesting. Yields are, of course, we talk about them often on the show. They're a big deal because watching what they're doing can give us an idea on whether or not it's kind of like expectations for rate cuts in a nutshell. If you have these things trending lower, rate cuts are more expected. If these things are trending higher, rate cuts are not as expected, or even rate hikes could be on the table. If you take a look at a weekly chart here, you can see that the 2-year government bond yield trended up massively in 2022. That was why the dollar was so strong. And we've gone sideways now. And the question is now, again, with the inflation stuff, if you get strong, persistent inflation, this thing could trend higher again. And if you get weak inflation for a suspended period of time, you may start to see this thing kind of unwind. But Ivan, what do you think about this? I mean, we are really just stuck in a long-term range for yields. And that's kind of the story of interest rates.
Yeah. What can I say that actually makes value? So first of all, where are we? We are 4.24. To be expected inflation in 10 years, and then 4.7 in 2 years. I think that the market still wants more evidence that it comes down until it just says, drops it off. We are higher than the beginning of 24. We are in a kind of a bearish trend at the moment. That's how I read it. But in the grand scheme of things, we are high. We should be going lower, as inflation is going lower, presumably at least. And then we have, by the end of the year, priced in, at the moment, changes every day almost, we have priced in 2 rate cuts by the end of the year. First one coming in I think it's in September. That has been 1 rate cut. It is now 2 rate cuts. And if this one now starts to rise, probabilities for more rate cuts, this one is also then projected to continue falling. So in the grand scheme of things, I think that we are too high on the yields. I think it should go lower, and I think they are just waiting for a catalyst.
Sure.
For confirmation of theory.
Yep, and there could be several different catalysts. Whether it be an inflation data starts trending lower, or jobs data continues to cool. There are some things in the works that could continue to trend yields lower. I'm kind of a believer in that as well. I've got my TLT position, which is I'm basically long duration bonds, which has been going well recently, but I've been stuck in this trade for a long time. It's kind of a position trade for me. I think that we do see rate cuts this year, and if that is the case, then this should continue higher overall. So this is kind of a dollar bearish trade as well. So we'll keep an eye on it. But yeah, Ivan, thanks for coming on. We gotta move the show on. We got our next guest coming in behind you. But before you go, I just want to say to everybody who's watching here with us live, Ivan does coaching webinars within our VIP room. We mentioned earlier that the VIP room is currently discounted. We'll drop the link if you'd like some more information about that. It's 50% off right now. But also, if you're inside of the group already, and you would like to do some coaching, if you're looking for one-on-one help, Ivan does offer that. Send him a DM on Discord. It takes 2 seconds to do so. All you have to do is go on the Discord channel. Hold on, I'll show you where you can do this. If you go on here, boom, just click Ivan's name and send him a message, and you can ask him about one-on-one coaching if that is something that you're looking for. And you can also find him on his own YouTube channel. We'll drop the link here to Ivan FX on YouTube. And Ivan, thank you very much for coming on the show today, man.
Thank you for having me.
All right, see you next time. All right, guys, and we are pushing on. We got our next show starting here in just a moment. We're going to be joined by Kinzo from Extra Hot Forex. So we're going to be going through some setups with him as well. And we're going to take a quick break. We'll be right back just after this. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page You can also browse the latest institutional money flow through the Commitment of Traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream. All right, and we are back with Kinzo from Extra Hot Forex. Hey, Kinzo, how are you?
I'm doing great things, and you, man?
I'm doing well, and it's good to have you on the show again here to talk a little fundamentals as well as charts here. The NASDAQ is just continuing every single day, it seems, higher and higher off the idea that, again, the Fed will look to cut rates, that inflation may be coming down here soon. And again, company profits are doing quite well. I'm curious as we get started here to hear your thoughts on the indices. Are you trading them at all, or are you waiting? What are your thoughts on them right now?
Yeah, I'm trading them with cautious. We did have a very nice trade yesterday on NASDAQ. It was going up very nice because we had a smaller breakout that the market. I see the breakout on your screen there. That the market broke out. Then we jumped in around that level. So
nice.
At the moment, yes, there. So at the moment, it seems like it's struggling to go even higher. But I can say it's actually overbought. So a reversal, I think it might happen every time, anytime. I thought maybe retail sales, it was going to be maybe a little bit positive. Maybe we're going to see some reversals, but it seems like things are now no longer in the favor of the dollar. So it's also good because that shows that inflation is slowly going down.
Sure. Yeah, that's a good point too. I think that I was saying this earlier, that retail sales kind of has a weird effect on stocks, because if you have strong retail sales, that would be good for company earnings, but not good for inflation. And if you have weak retail sales, that would be not good for company earnings, but good for inflation. So it's kind of like a back and forth, give and take, if you will. But as you mentioned, the NASDAQ is currently, back up here, kind of teetering between this 19,000, 20,000, really 20,000 upper limit and the 19,900 level. We'll see if it wants to break one way or the other. It is, like you mentioned, in my view, also pretty dang overbought here in terms of due for a bit of a pullback. It's not something I'm looking to short, but for me personally, I would need a little bit more of a pullback before I can get involved. Even if we drew like a fib here from this level here, that 61.8% retracement looks pretty interesting. But again, this market just wants to keep going higher, so it's kind of hard to fight the trend, and trying to wait has been, keeping it takes a lot of patience, that's for sure. At the same time, you've got the dollar index. You mentioned some weakness in the dollar. What are your thoughts here? And if you'd like to share your screen, you can. If you're not sharing it today, no worries.
Sorry, I forgot.
All good.
Yeah, I forgot to share. Let me share it very quick. I thought I was sharing. So, yeah, on dollar index, I was just trying to see what's really happening with the dollar after retail sales. It doesn't really seem like it's too much because the dollar seems to be quite strong. We understand that they might cut the rates, but I think they might cut once. So that might also not be a good thing. That's why we see dollar still continue to go up. On my structure here, we had actually a resistant area, which seems like the market is trying to break out. And already we see a breakout. If it retests here, we might see a continuation of that uptrend. But slowly, maybe we'll see a reversal, because cutting the rate is also a good thing. But it seems like it's not really enough. That's why we see a nice reversal going higher. Maybe maybe later on, we might see a nice reversal. But at the moment, on my daily time frame, you can see that it's actually a very nice bullish structure. So we will see what will happen. We will see what will happen. This is what I have at the moment. So we might have something like that. It's possible.
Yeah.
But since they're going to cut the rates, or since the inflation is going to go down, maybe they will change their tone next time on the next maybe Fed meeting.
Sure. Yeah. And I think that if you take a look at the dollar index itself, it's very interesting on the daily chart that you have this breakout here that occurred recently. But it's a breakout that had a long wick on the top. It looks like it wants to go back and retest this area. The question will then be, can it hold that level, or do we break back into the consolidation level? I think that if you if you get a break through these highs, the dollar likely is going to push up to that 106.4 level. And if you break back underneath this supportive area, we may just be back in range bound territory. So we will have to see what the dollar index does from here. Gold, of course, seeing a little bit of a pop here this morning off of the cooler than expected retail sales numbers. What are your thoughts on gold here today, Kenzo?
I think gold, where it is, it's been struggling at this level at the moment. On a bigger time frame, we can say we are a little bit lower at the moment. So I think it might be a good time for gold maybe to bounce back again, because we're coming from this higher level here. Maybe we might have a bounce back. And I don't really know why, because we have like tensions or geopolitics all over the world. I thought maybe it was going to recover very quick, but it seems like it's still struggling. But let's hope that maybe we are going to see maybe another push to the upside. I think that might actually happen, especially when we are from this support area. I think this level here might be quite similar to this level, around that level. I think maybe that might repeat itself, but we can easily see that this horizontal structure there, it's what's hold this market for quite longer. We saw the market reversing around this level. So maybe we might see another reversal around this level. So with the geopoliticals all over, Russia and Ukraine and the other ones, I think this might also push the market to go up again. But it's up to the market. We will see what will happen.
Yeah, for sure. And we will have to see if there's any sort of spike in geopolitics. That usually is a positive thing for gold, oddly enough, but it does make sense. People kind of flock into the safe haven. I like that level of support you have on the daily chart. I've got the same one drawn kind of just to see where this is. I currently have a long position on gold. If we break through those lows, I'm out of the trade. And if we continue to push higher, then that would be great. But we've been very range bound here recently, not really making too much of a, as you mentioned, it is kind of struggling at where it currently sits. We'll see if this level of support can hold, or if we get another kind of lower high and we break through lows. In that case, like I said, I will be stopping out of this position and finding something else to. But Kenzo, if you'd like, I'm going to leave the stream to you for a little bit. If you'd like to go solo, if you're okay with that, just to take over for a little bit. We've got until, another 15 minutes here until our next guest arrives. Are you okay with just kind of going solo and working with the chat for a little bit?
Yeah, that's okay. I mean, there's no problem. 15 minutes is okay.
Okay, awesome. Yeah, I'll be back in just a little bit. You've got the show for a little bit, and I'll be back soon.
Okay, that's great. So yeah, as we continue with the stream, I think the best way to continue it will be you guys sending some questions, or maybe the pairs that you want me to go through, or here on the market. So on the comment section, let me know which pairs do you want me to check. I can see someone. Chen, how are you, man? I hope you're doing great. Let me see. I see you, EuroCAD. Someone already sent something. I will go through that. But at the moment, guys, for those who maybe don't really follow economic news, we have like some serious economic news happening, or let's say geopolitics, that has enough effects on the stock markets and just currency pairs. And when we have this geopolitics, most likely the market won't even follow our strategies that much. So which means you have to understand fundamentals here and there, because if you know dollar, it's still actually at the moment is still actually a safe haven, and also gold. So if maybe they're talking about cutting the rates, that is actually good, because it shows that okay, if they cut the rates, it's gonna be safer to actually put your money on the US. But if maybe things are not going very well, I think gold is also another option. But at the moment, it seems like actually the dollar is holding up. We had some negative news. We had CPI, which actually it was quite lower, but the market failed to break the support area. But at the moment, we will see what will happen. But with the structure that we have here on the daily time frame, as I did discuss, you will see I think you will see that this dollar index is actually on a very nice uptrend structure. So at the end of the day, I think the market might just continue like that, unless if maybe we have any aggressive economic news or any geopolitics that maybe might put pressure on the dollar, and we might see some actually sell-offs. So on Thursday, if we can try to talk about the fundamentals, on Thursday we have interest rates from Britain that also had some effects. So we'll see what will happen. But at the moment, I don't think they're going to increase the rates. So let me see which pair do you want me to check. Silver analysis. I can thoughts on Euro AUD. Let's check Euro AUD USD ZAR. Okay. Let's see USD JPY EuroCAD. Let me start here on EuroCAD because I might forget about that. Let's check Euro Canada. Do I have that? I don't think I have EuroCAD. Let me add that as quick as possible. So I don't really add everything, guys, on my watch list because I don't trade everything. So yeah, this is what we have. I think, we did actually do this analysis. So this is what we have. I will try to clear what I have at the moment on EuroCAD. This is the daily time frame. I think the market is actually moving like that. And that it's actually a very nice uptrend structure. Let me try to draw that before I go actually on my 4-hour time frame. Let's see if we have this. You can see that makes sense. So I will use double lines around this level on Euro Canada. Let's see, something like this. So this is a very nice uptrend structure. So you can see that the market is actually moving like that. So if we did get this one earlier, obviously we're just going to jump on that. So let's see on a 4 hours time frame. I'm trying to be as quick as possible so that I can cover some of the pairs that you want me to check. So this is what we have on a 4 hours time frame. You can easily see that the market is still respecting these levels. So it shows us that, yeah, this is a very nice uptrend structure. So obviously you will expect the market to continue moving to the upside. At the moment, I think like actually the market is still very, very, very closer to our support area. I think a continuation of that buy can actually work very nice. Let me remove those things. So I think a very nice continuation of a buy that can actually work very nice because we are not really far from this support area. And I think the market can still go further than that or above this area as we are on an uptrend. But don't just expect one candlestick. One candlestick. The market will just go like that. That's how the market moves. So this can be a very nice buy structure. So another one. Let's see another one. EuroCAD, we did that. USD JPY, let's go on USD JPY. Maybe we'll get something there. USD JPY, what's really happening? So Euro JPY, it's actually on the highest level, but the overall structure here, it's actually a very nice bullish move. We are on this nice uptrend structure, but where we are now, the market is actually playing around let me remove this so that this chart can be clean. So you can see that the market is actually on this level. So this area is actually our resistance. So sometimes you can have some confusing structures, as we have this area where the market doesn't really touch our resistance nicely. But it's fine. Just place this above this smaller moves there, so that you can cover everything and you don't really fall for any fake move. So at the moment, we are actually on a wedge structure. So it's up to the market to break this resistance. Then we can continue buying, or maybe the market might just play around this support and resistance, unless if maybe the market tries to break out of this support area. But at the moment, it shows us that, you know what, the market is willing to break out of this area. We had the news, retail sales, which were not really good, but we can see that the market did not really move away from that resistance. So which means the market might end up breaking out of that area, especially when you already know that we are on a very nice uptrend structure. That it's actually something that you should also know, that the market can still continue going higher. So the other one is going to be, let's see, appreciate you, Kenzo, for also from SA. Thank you very much. XAG, what is that? It's platinum or it's silver? I will check that. So USD ZAR, let's check USD ZAR. Earlier I did check USD ZAR. It was quite strong. Huh? So I think maybe on the daily time frame that can actually make a very good structure. Let's see. USD ZAR. On a bigger time frame, we can easily see that the market is actually on a very nice uptrend structure. But where we are, we can see that the market is exactly on the support area. So the question is, will the market find a nice respect there and bounce back, or maybe the market might break out? But it seems like the market might end up respecting this level. Then we might see a very nice reversal, or we can say a bullish structure. But we can easily see that the market is coming from a very nice uptrend structure, and that might be a continuation of that. It seems like the market is continuing. So the reason why we don't really consider this or breakout, you can see we have a diagonal structure there. It's because we also have a nice horizontal structure here where the market did respect, and it's at the same level. So if maybe you want to consider a sell, it means you just have to wait for the market to break out of that structure before you say it's a sell. But at the moment, it seems like the market is trying to respect that. It seems like the market is trying to respect that support area. And if it supports that, it means if you can get anywhere around this level, you will be at the lowest area. And that will be good for someone who is going to buy, because the market might actually bounce aggressively to the upside. So plus, I think maybe retail sale also added some fuel there with this sell, but I think the market maybe might end up reversing. But we will see. We will see what will happen after that. So let's make it quick. Silver, please. Silver. And guys, I don't really Euro AUD. Let me check Euro AUD. I will also check silver, but just know that I don't really follow silver that much, but I will try my best to check that. Euro AUD. Let me check Euro AUD. Yeah. Euro AUD, what's really happening on a bigger time frame? It's a daily time frame. It shows us that the market has been actually trying to go down. You can see on top here, the market gave us some very nice touch. So it shows us that we are on a very nice downtrend, but we reached this level of a support area. So there is a chance for the market to reverse. You can see here the market did reverse. So if it doesn't really reverse there, obviously we should wait for a breakout, then we can continue selling after this support area, because we can see previously we did have a nice support around this level and the market did reverse. So maybe here the market will do the same thing, then maybe we can sell around this level. But we'll have to wait and see. The overall structure, it's actually a downtrend structure. So it seems like the market did not really shift much since 4 days ago. I think I did this analysis 4 days ago. So the market shows us that it is still actually playing around the same level. But yeah, maybe the market will be bouncing back after that. I will check actually silver also, don't worry. Accumulation is not determined by support. May also your channel grow. Thank you very much, Silva. Silva. Okay. Someone said, "Can let's check Silva?" Let me check that. I don't know if I have Silva here. Where is Silva? Let me add Silva very quick. Let's see. Do we have Silva? Silva. Okay. Okay, it's fine. I added one Silva there. Let's see what's really happening. Okay, I did do Silva. So let me just go on 4 hours time frame just to see. So guys, yeah, you can still analyze this other pairs or silver, but it doesn't really mean that you should just trade everything, right? You should have your own stuff that you trade. Then that way it will also help as a nice actually risk management. So let's see what's really happening on silver. I think we have something like this as a support area. So on my side, this is a very nice support area, and we are on a very nice area where maybe we can actually think about buying. And you can see the market is trying to move away from that. I see this type of a structure going even further. It shows us that the market is trying to respect this level here. So there is a chance for the market to bounce back. Let's just zoom a little bit. I see the market is moving aggressively fast around this level. I think here we also had this horizontal support. Let's try that. I think something like that. Do you see that? I think that makes sense. I think that makes sense. And already I see a 4-hour candlestick trying to run away from this support area. So maybe that can be a very, very, very nice buy, especially when we can see that we are coming from this nice uptrend. Yes, this is a nice reversal, but the overall structure is actually an uptrend structure. So that's why the market is respecting this level, and it might continue like that. But since I don't really know much about the fundamentals of silver, I hope you should also follow the way, I mean, your strategy, how you approach it. Then you can nice move that can continue like that. So let me check the other one very quick. Silver analysis, please. Okay, I did that. I hope maybe that helped. I did that. Bitcoin, please. Euro NZD. Okay. Let's check Euro NZD. What's really happening on Euro NZD? Do we have that? Yeah, I think I have to add everything here. Euro NZD, I think I don't really have that here. Let me remove this. Or someone said check Bitcoin. I'll check that before Euro NZD. So here, this is what we have on Bitcoin. I will just go on a daily time frame because these moves are quite big. So for it to be nice and clean, you just have to use a bigger time frame. So this is what I have. So you can see that the market has been actually going to the upside, even though the market seems to be trying to reverse here and there. But this is an overall uptrend structure. You can see we're coming from that side. I mean, from this lowest side, still going higher. Where we are, we can see that on the bottom side, we also have a nice support area, which the market did respect. At the end of the day, this is a bigger ranging structure. The market is actually creating this ranging structure on Bitcoin. And with this type of a structure also, you should consider something like this, because already the market gave us a clue that it's respecting this level. So it might continue like that. And sometimes it might actually break and respect this area and continue like that. And if that happens, just know that you need to adjust your support area, because the market will be respecting our horizontal structure. But now it shows us that the dollar is gaining some momentum a little bit. And at the moment, we are on a support. So it's up to the market whether to respect this support area and continue going higher, or maybe you will just have to wait. You will just have to wait. So yeah, that it's good. So Euro what? Euro NZD. Let me check, or maybe we out of time. So I think we out of time. Someone need to actually, yeah, someone will be taking over. Sorry if I did not really answer everything. I think, yeah, those are like enough comments. Unfortunately, I could not keep up with that. So thanks.
No problem, Kenzo. You got to a bunch of charts. Next time we'll get to more. If here's a little plug for you. If you didn't get your chart request looked at, you can always go follow and subscribe to Kenzo on his own YouTube channel. If you're not already following it, we'll drop the link here for you to check out Extra Hot Forex on YouTube. It is free, great value on YouTube for people looking to improve in their trading. So please take a moment to go subscribe to Kenzo's YouTube channel there. Kenzo, thank you very much for coming on today and helping us out with the show. I appreciate it. And we will see you back Friday.
Thank you very much, man. I'll see you on Friday.
All right. See you then. Okay, guys, now we're going to transition momentarily again. We're going to be taking just a quick break, and then our next show guest, whoops, I didn't share my screen, so we got this sunset on the screen instead. The train is running through the valley. It's kind of a beautiful scene, but we're going to mess it all up by showing a chart now. But real quick, we're going to just take a short break, commercial break, and then we'll be back with Forex James from Elite Traders. So stay tuned. We'll be right back after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, and we're back with James from Elite Traders. Hey, James, how's it going, man? Oh, I think you're muted.
Sorry, yeah, I'm good, thank you. How are you?
I'm good. Good to have you back on the show, and I'm glad to see you're becoming a regular here. I've seen comments, people enjoy your sessions, so this is going to be awesome to have you back. Just for James, if you don't mind taking a moment here, I'm gonna, if you're good with it, taking over the stream for a little bit, I'll leave you to do your thing. If you would, just for people who are tuned in for the first time to one of your sessions, give them just a little bit of an overview. And while you do that, I'm gonna take a back seat. But also, guys, if you'd like to check out James and his work, you can check out their website, elitetraders.io. We'll drop the link to that here while we get started. And James, you've got the show for a little bit. Enjoy it, man.
Great stuff. Thank you. So, yep, guys, I'm James. I run a company called Elite Traders. We have a Discord channel. We do, signals, analysis, webinars, bank reports, those types of things. So it's kind of a all-encompassing company. We deal with lots of different things. So we do a very similar thing to A1 trading. We build certain indicators and things and help individual retail traders. So there's a couple of things I want to cover today. First of all, we'll get the boring bit out of the way. So I just want to show you two bank reports. So the key one here is here. So this is Agricole. And the takeaway here is, so if you don't know what bank reports are, they are reports made by banks and institutions, and they're sent out every day. And they give their thoughts on the markets, their positions, and data and things. So yeah, to get that out of the way. So what I actually want to show you is this. So this is Credit Agricole's reports for today. So it says, in 2025, we maintain our forecast of a more aggressive easing totaling 150 basis points, which for anyone that doesn't know, that is 1.5% through the first 3 quarters of the year. But stress that this view is predicted upon our more downbeat macro outlook. If that does not materialize and the economy and labor market remain more resilient than we anticipate, then the Fed would likely stick to a more gradual pace of cuts. So this doesn't really tell us if they are cutting or if they're not. Obviously, this is just a forecast. It's just an idea written by CIBC, which is Credit Agricole. But it's something to keep in mind. So feel free to screenshot that, keep it in your notes if you want to. And the last thing is a little bit less boring, so don't worry. Let me just fully open that. So these are positions that are actually Credit Agricole are actually in. So interestingly enough, I think that the majority of retail trades are actually quite mixed. I see a lot of people trying to trade the trend, especially on dollar yen, and then we have the more skeptical retails that are trying to sell, buy the yen and sell US dollar yen and euro yen and so on. But what you'd be interested in, I assume, is that quite a lot of institutions are now starting to short these assets. So you can see dollar yen. They opened a short yesterday. So you can see here direction sell. You see the entry, the target, the stop is 2.7% of a price difference. So it's not, they don't go for pips or a capital percentage necessarily. It's more of a price movement in percentage wise. So what I could show you here is if we look at euro yen, which they're also currently shorting, this is their position I marked up before the stream to visualize it for you. So if we look on the weekly chart, where is price right now? It's currently approaching all-time highs. So having said that, this is a extremely strong level of resistance. And now I'm not saying that this is an indication for you to go and sell. Obviously, that's definitely not what I'm saying, because what you need to also realize is that these funds have, essentially unlimited money. So it's not a case of, if they take 2% risk on this position, it hits stop loss, they'll be worrying and have FOMO and greed and all those things. They have strict risk models, and they'll have accounted for every situation that could come out of this. But it's definitely something to keep in mind. So if you are looking to start trading yen pairs, or you do trade yen pairs, be aware that the large market players are now starting to take short positions. And on my stream, I guess on this stream a couple of days ago, I've been talking about the 135 level on the dollar yen. And this is not necessarily in Wall Street, but on Canary Wharf, which is the equivalent of Wall Street in London. 135 is the long-term expected target. When I say long-term, it could be a year, could be 2 years, could be 3 years. I'm not talking by next month we're going to see a huge drop. So let me just read some of these comments. Let me catch up. How do we find reports? So you can't get reports. You can't just go on a website and get them. You have to apply for reports. You have to be a respected person or a trustworthy person. They're not just sent out willy-nilly. We do send them out in our Discord. We have access to them. So they're sent out to our members every day. EU and UJ sells, that's the positions. Interesting. I agree with both of those. Assets, big gold, Euro yen, stocks. Okay, so moving forwards, my current favorite position that I'm looking at is Euro New Zealand. Now, I would have loved to get in here. This was one of those moments where I had to I had to put my big boy hat on, my professional hat, and say it's a very bad idea to enter right now. Although technically it looks good, and fundamentally I'm more than happy to take this. We've got a weakening euro. Euro is depreciating in value. We've had positive news for the Australian dollar. Australian dollar is very well correlated with New Zealand. So they kind of all go hand in hand. So this trade is a no-brainer in some senses, but we do also have New Zealand news tomorrow. Let me just pull it up for you guys. It might even be tonight, actually. I'm not sure what the time zone is here. Yeah, tonight. So if we look here, we've got New Zealand. We also have tomorrow night. This is what I was actually looking at. We've got GDP quarter on quarter and year on year for Q1. So it could be significant for the New Zealand dollar. So it's one of those trades where everything's lined up. It's just there's a bit of a bump in the road that I just don't want to deal with. So at the minute I'm sitting on my hands, but it's a bit painful because if this goes and hits take profit, it'll be one of those moments where I'll just have to go and sit in a dark room for the rest of the day. Any reason to use bullish candles as blue? Honestly, no. So I change my chart every sort of couple of days. So, I have just solid colors. I have all sorts of things going on. It's just my current setup is red and blue. I quite like changing them. It's I don't know why. It's I don't know what the word is, or there might be a saying for it or something, but when you look at the same thing over and over, so if I'm looking at charts every day, basically most of the day, and it's always the same color, and I'm looking at the same thing, it gives you sort of tunnel vision or brain fog and things. I like to refresh it, you know, give myself a fresh perspective on things, new colors, dark mode, light mode, so on and so on. Euro dollar, I'm not too happy with euro dollar, so I'm pretty bearish on both of those, so dollar and euro. So for me, I guess primarily I'd be looking for shorts because I'm more bearish on the euro than I am on the dollar. But it's, yeah, for me, I'm not too happy to go short here. I would only really be interested if we could come up back to the pre-NFP price here. So this was almost 2 weeks ago now, I think. So yeah, I think if we could come up here, I'd be happy to take a short and take a little stab at it. But if this level's not met, I'm not too interested. Gold, again, I'm not too happy with gold. I'm not bearish on gold. Let me just clear that up. I could see gold coming higher. It's just at the moment, I'm just not too interested in its price. Hold on, let me just add something quickly. Yeah, so we're really separated from the 200 moving average. And I know some of you will don't like indicators, but there are, a mean reversion is a real thing. It does happen. And I'm not saying that, gold's going to suddenly drop off a cliff and meet the 200 moving average. That's not at all what I'm saying. But I don't like to buy when price is high. I think that makes sense to all of you. So for me, if I was to go into gold, I would need to see a much lower price. I would need to see, sort of a reversion back to sort of this area here, meet the 200, meet this previous level of support, and then potentially head up. But of course, this is the daily time frame. That would be quite a large move to happen for no real reason, especially with a weak dollar. So not really holding my hat on that one. It's more a case of I'm just sitting on the sidelines with gold. However, saying that, silver is beautiful. I really, really like silver. So let me get rid of this 200. I mean, we do see a very similar thing. We're quite deviated from the 200 on silver, but in terms of the technical setup, it's a lot more clear on silver than gold. So let me just quickly go back to gold. If we look mainly on sort of the 4 hours, even the daily, the 1 hour, this to me is just a big range. I have no interest in trading ranges. This is it's too messy for me. I mean, we do have very clear support and resistance here, but there's this area here, which is basically no man's land. And this, of course, is basically all-time highs. So silver is a little bit different. So if we go back to the daily, we do have previous levels of structure to use as targets. So we've got levels here. Actually, I don't know if you guys can see that line. So we've got all of this space here. We've got all of this up here as well. So silver's got a lot of room to potentially move up in terms of previous levels to target. Whereas gold, because it's essentially all-time highs, it's a bit more difficult to gauge where to take profits or where to look to close out. Obviously, this depends on your management. For me, I like hard take profits, hard stop, so I don't close a trade in between. It just hits one of the two. So for me, silver's not good. Gold's not good. So let me get back to the price action. If we draw a fib, so actually, let me just tell you guys, this is a bit of a shameless plug, but on the Elite Traders website, there is a tab. It's called the source course. It's a 20-minute video explaining my strategy. It's completely free. So if you guys are a bit confused as to all this, what I'm actually doing, and you want 100% clarity, you can go and check that. But anyway, price came down to the golden zone on the fib, and this coincides with this previous level of resistance. So for me, this looks like a very, very nice break. So we've broken above the structure, retesting, and potentially coming up further to reach previous levels of, previous highs. This level also is previous resistance here. So this is quite a significant one. Don't forget, this is the daily time frame. So for me, I don't see enough momentum here. You know, we're still moving to the downside overall. I mean, well, sorry, overall. Currently, we're moving to the downside. So for an entry here, I would really like to see a bullish candle. So a bullish, let me just change this box so I can visualize it. Yeah, so here we go. So a bullish candle to do something. Can't drag it. There we go. It's just to break out of this trend line, break past the previous candle's highs, and that would be a good confirmation for me to go in. We enter on the daily close or the 4-hour close, depending on time frame, and we could quite, well, I say easily, it could be a very simple 1 to 2 or 1 to 3. Basic question: how can we know when the pullback phase is over near an S&D zone, trend line, and or is it volume fib? Yeah. So Sashi, I think that's how you pronounce your name, Sashi. This is why I use the fib. So for example, if let's remove the fib, this still makes sense because we have previous structure here. But if the structure wasn't here, so let's say this high just wasn't there, then yeah, you would have no sort of indication. You could use moving averages, you could use RSIs. So for example, if the RSI becomes oversold like it did here in the past, we start coming back up. That's an okay sign, but it's not strong enough. Whereas the Fibonacci is obviously, well, I say obviously, in my opinion, it's a lot more reliable, especially on higher time frames. So I really like the fib. I use it on essentially every trade, unless it really doesn't work. Shifting trend, different economical data from previous gap between buy and sell order volume and volume itself. That's my take. Yeah, fair enough. Okay. Sorry guys, when I go quiet, I'm just reading your comments to make sure I haven't missed anything. CHFJPY. You know what, guys? Actually, I completely forgot to show you the edge finder. I'm not sure if Nick's already shown you this, but whenever I come on, I like to have a quick look with you guys. I'm fairly sure CHFJPY is on the edge finder at the minute. No, it's not. Oh, it is. Sorry, I'm lying. So wow, yeah, huge moves here. Actually, I didn't notice this. So if we look, edge finder, CHFJPY is the second most bullish asset with a score of 8. The only bearish signs here are seasonality and interest rates, but you know, whatever. So yeah, CHFJPY looks really nice. I really want to get into the dollar Swiss as well, but dollar Swiss is a bit more difficult. So I mean, there's not much for me to look on this chart. Let's be honest. This is just a trend to the upside. I can't, you know, I can't really give you much here, other than wait for a pullback to buy potentially. But yeah, there's not really much I can weigh in with there. It's clearly in an uptrend. We clearly should be looking for buys. So dollar Swiss looks beautiful. So you can see, I'll use the H4 for this. So you can see, again, I tried to use the fib here to try and get an entry. So this would have been really nice. We came up, I think this might have been CPI from what I remember, but it just wasn't sustained, and now we'll continue into the downside. So this level has now been broken. So what I'm looking for next is a retest. So again, this goes back to my break and retest sort of strategy, is waiting for price to come back to this level and then a continuation to the downside. And hopefully, potentially, we could get this to align with a fib level. Obviously, we don't know where the bottom is yet, so we can't really draw a fib. But yeah, this would be sort of the ideal situation. So if the 50% pullback level is in the middle of this support, this would be very textbook for me to trade this. So something like this, maybe a bit wider stop, something like this. So maybe a 1 to 2, 1 to 3. So yeah, let me just take a look. We are in Euro Australian shorts. So going back to what I was saying earlier, what did I say? In fact, I'll give you guys a minute. If anyone can tell me why they think I'm in a Euro Australian dollar short, let me know, because I'd be quite happy to see. I'll give you guys a couple of seconds. I don't know if there's stream delay. So on the watch list, pound yen, crazy. So yes, exactly. So we've got hawkish RBA. So again, that would be, like I was saying earlier, for Euro New Zealand, we've got positive data for the Australian dollar. We also have a weakening euro. So what does that give us? That gives us a weak currency against a strong currency. So we obviously want to buy the Australian dollar and sell the euro. So it's very, very simple. So technically this is on the 15 minutes. So this wasn't my trade. This was one of my traders' positions that sent to the Discord. But we can see really nice double top foot. Well, not quite a double top. Quite a nice lower high formed here. We had a bearish 15-minute candle close. We were bearish on the economics anyway. We'd broken out of this previous support level, so it all lined up quite nicely. Textbook trade, no brainer to take. AUD by Asia to trade. I'm not sure what you mean by AUD by Asia to trade. Sorry. Pound yen is actually one of my favorite things at the minute. So I took this trade not too long ago. I think, when was this? 13th. It's actually probably, last week. So it was a while ago now. And I was looking to take another trade here. I put out a Sunday analysis video where I was talking about going long on this as well around here, but I missed it, unfortunately. So actually, let me just, I think I'm running out of time. I'm not sure if there's a guest on after me. But again, this was another one I spoke about on my Sunday analysis video. You guys probably think I'm just copying Nick at this point, because Nick does Sunday analysis videos as well. So again, hawkish RBA, weak yen, no brainer, weak against strong, or strong against weak, vice versa, whatever. We obviously going for a long here. But TP at previous highs. Unfortunately, didn't take it because it left the station without me. This was market open on Monday, and price was tanking down. And of course, I don't want to buy when price is just heading strong to the downside. And then unfortunately, when I was sleeping, we had a nice move to the upside that I missed. But this is a great example again of the fib. So let me just try and clean this chart up. There we go. So we can see the fib drawn from low here to the high. So I use the wicks. I don't use the body close. The candle body. So wick to wick. So low to high. Golden zone lined up really nicely with this level of support, and that's it. Simple as that. We just go buy. I mean, obviously, I shouldn't say as simple as that. Don't go and just start buying and selling because of that. But I've been doing this for a long time. Gold signal. We can have another quick look at gold. But my point of view on gold is it's in no man's land. So I think I've said it a few times on this stream now, but I've been chopped up quite a lot in this sort of range. I think off the top of my head, I think it was probably 5 or 6 positions I took throughout this whole period. There was 1 for 1% profit, 2 for losses, and the rest was sort of break even. So made an overall P&L of about -1%. So that's great. So I've got a bit of a grievance against gold, but I'm not looking to really trade it. But if you are looking to trade, let's go to the 4 hours again. We've got this clear level of support. Oops, let me change this back. Clear level of support here, and a pretty clear level of resistance right here. But in my view, this is quite a risky place to be in a trade. I'm not saying if you bought down here, I'm not saying it's risky. I'm saying if you entered right now, it's a bit risky. And I am quite a conservative trader, so I use generally around 2 to 3% risk per trade. I know the sort of general consensus for trading is risk 1% per trade. But something when I was starting, when I was first starting out, I was losing money. I did only risk 1%. But something I always wondered was if traders are profitable, if they have, a 60, 70, 80% win rate, why don't they use higher risk? Obviously, I know that capital protection is the absolute priority as a trader. That comes first. So the way I work is I trade less trades. So I might take 2 or 3 trades a week, you know, each at 2 or 3% risk, and that's it. That's basically me done. But then I also have very strict risk models in place. So, you know, it depends on what assets are correlated, inverse or direct, you know, all that type of thing. It's quite extensive, really. So anyway, sorry, I went on a bit of a tangent, and I know no one asked about that, but yeah, if you've got questions, again, you feel free to let me know. More than happy to answer you guys. I really like Nick's community. You guys are great. So yeah, happy to help any of you guys out. So let me just have a quick look if there's anything else here. Euro Swiss. Again, I had a short-term position on here for just 1%. Well, I say 1%. This was 2% for me, but it was a 1% move, or 1% for R&R. So what I'm looking for, again, because it's the euro, I'm looking to go short euro. Actually, I missed this. This would have been really, really nice. I'm a bit annoyed about that, actually. I did not see this happen. What time was this? 9 a.m. on Monday. That's interesting. That happened yesterday. I didn't notice. It's a red flag for me. But yeah, this level here I'll pull it up in the 4 hours so it's a bit more clear. This level was sort of the watch level. This was a pivot point for me. This was, depending on the euro data and what happens, will we see a reversal at this level, or will we see a continuation down? And as I've been saying for this, basically this whole stream, is if we break below, I'd like to see the retest. And if we fail, so if we bounced off, I'd like to see a continuation up and a retest, or again, another type of retest here. So something like this. So I always like to see retests, and it did happen here. However, one of the reasons I missed it, I'm starting to remember now why I stopped paying attention, is because it didn't meet my rules. Oh, it did. That's strange. I don't know why I didn't take this trade. Anyway, it's one of those things. You don't get into everything, do you? But yeah, so now the next plan for this, for me, is this new level we've formed. So we can see quite minor support. Don't get me wrong. This is nothing too strong. But again, now we draw fib and we'll look for the new low. So hopefully we could potentially see, and this is, in an ideal world, I'm not saying this will happen, we could see something like this. So we come back, 50% level would hopefully align around this support. We could take a position here. So something along these lines. So that would be ideal play. But yeah, we'll see when price starts to pull back a little bit. Break even, stop loss, and unlimited trades by trading pattern. Anton, I'm not really sure what you're talking about, my friend. I'm sorry. I don't know if I'm being stupid, but yeah, I've got no clue what you're trying to say. So I'm just having a quick look around here. Let me pull EDGEFINDER back up because I didn't actually look at everything. Give me one moment. By the way, A1, guys, I don't know if there's anyone ahead of me, so if I'm taking up too much time, feel free to just come on and kick me off. I won't take any offense. So Australia and New Zealand is the most bullish asset. Gold is up there. Let's have a look at silver, because I know silver's on a lot of people's watch lists. Oil, yeah, we can do oil. That's actually popped up right here. Let me just USO USD. That's strange. Why is it not popping up here? Spot crude. So I actually have this open somewhere here. So if you guys trade oil, it's important to know what OPEC are doing. So this is just CNBC, this is public. Anyone can get access to this. It's just the news page. So this is the one specifically for OPEC. So we could take a look at 11 hours ago, see what the situation is here. See, have a quick look. Extending gains, confidence, OPEC producers. Okay, so a stronger demand outlook and investor confidence that OPEC producers could pause or reverse plans to raise supplies for the fourth quarter of this year. Okay. Tension in the Middle East also kept flow. Okay, so yeah, I'm not going to read all on the stream. I don't want to waste you guys' time. But point is, I don't look at commodity specific news too often, so I'm not too sure what I've missed here. However, I was stopped out on Brent oil, so I think we had a position around here, and we got stopped out, unfortunately. But that's one of those things. At the time, obviously, we did see. So I'll explain why. So we saw, break. We were looking for this retest. We did see this this daily bearish candle, and then we tried to take it lower, but we didn't even have. I think we didn't even have about 2 minutes of profit. This went straight up and hit stops, basically. But hey, that's part of the game, unfortunately. So price action standpoint on oil. Actually, we're at quite a nice level here. Depending, again, bread and butter, just waiting for a break. So depending on how how it moves from here will be sort of a telltale sign. I also obviously need to go and do some research behind oil. Lee, James, hi James. Just out of curiosity, do you ever find yourself breaking your own rules? No, Lee. No, I think trading rules are a very specific thing. So let's say I mentored you, and let's say you work a 9 to 5. I'm not saying you do, by the way. I'm just making an examples point. Let's say you work a 9 to 5, and let's say you have I don't know, $1,000 capital. Whereas I trade, I'm at my desk full time. My capital is larger than that. So it's a case of I am quite happy to sit in a trade for 2 weeks to make, an average salary, for example, or a monthly salary, I should say, again, examples purposes. Whereas to someone else, that might not work because that 2-week period might only be a cup of coffee worth of profit. So it's a case of, if you copy, what I'm trying to say is if you copy someone else's rules and you copy someone else's strategy and management and risk metrics and all those types of things, just because they're profitable, it doesn't mean you will, because they're normally, generally speaking, their strategy is built for them as a person. How long can they wait? What's their sort of capital size? Is it worth waiting that long? What's their risk appetite? Those types of things. So just because someone has one type of risk thing or management doesn't mean it'll work for you. But yeah, sorry, I know I keep deviating. This is a bad habit I've got. But yeah, sorry, my point is I don't break my trading rules because they're built for me. I made these trading rules because I like them and because this is what I want to do. So if I break them, then I'm telling it's a sign to me that something's gone wrong somewhere. So either I'm emotional and can't hold the trades long enough, or something in my personal life has happened, or even my market cycles have changed. There's a multitude of reasons. But if I do find myself breaking rules, then I need to have a little sit down and ask myself why.
Hey, James.
Hey.
How you doing?
Yeah, good. Thank you. How are you?
Pretty good. I want to thank you for coming on the show today. We really appreciate it. Guys, we dropped the link to James's YouTube and his website, Elite Traders, in the chat right there. Go check out James. He's been helping us out a lot recently. He's definitely become a stream regular, and we're happy to have him here. But coming up next, we have Chris Pulver, and we've got Frank coming up. So we're going to go ahead and transition into that. James, I want to thank you one more time for coming on the show today, and we'll see you next time.
Yeah, thank you for having me. See you later, guys. Have a good day.
All right. Thank you very much. And coming up right after this, we're going to have Chris and Frank. So we'll be right back right after this.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
Hey Chris, how you doing?
Hey, what's happening? Happy Tuesday, Frank.
Happy Tuesday. Happy
How about-
short week of trading.
Yeah, we've got a little interruption with markets closed tomorrow, but how about yesterday's action? Felt like that should have been last week, man. Where was that move last week? In addition to CPI.
Yeah, honestly, it was a great move. Usually the market does not move like that on a Monday.
I know.
But did you reap any rewards?
Not really. Actually, it was interesting. So it kind of hit me yesterday that it's like, well, shows that I'm pretty diversified because I was pretty much flat on the day. Outside of I have a trade out to July on the SPY, and so that's probably the one trade that's benefiting from this. I took a little future scalp. I did take a bear call spread that I got burned on. So that was just, I mean, I went into yesterday's plan with it's Monday. Things are going to be slow. We got a holiday this week. It's like we had kind of the hangover from CPI and all this stuff last week. So I had a bear call spread on the SPX at 54.50. Got burned by that by like $4.50. So not ideal. But I got a butterfly on today to see if we can get some gamma squeeze up towards 5,500. If there's a little bit left in it, it's pretty tight, 44 to 35 relative to call and put option volume sentiment. So I'd like to see if today's price action just got to stay steady and maybe make a slow, steady melt up towards 5,500. If that is the case, I have a butterfly trade. This is a debit, not a broken wing. So I have the -2. Let me change the color here. I have the -2 at 5,500, and I went out 10 points. So I have the +1 here and the +1 here. And so I'm looking at possibly about a 5x return if, and again, I rarely get like the full return, but if we get up near 5,500 today, near end of day, then I could probably turn about a dollar debit into maybe a $2 to $3 credit. So that's hopefully
one day out, or I guess
it's
2
today.
days out.
It's today. No, it's just today.
Okay.
I did just a DTE for today, and then I bought an E-mini futures contract at 55 out for Wednesday's expiration. I think it's Wednesday. Let me double check that. Here are my positions. So this little guy, June 20th is going to be the Thursday. So Thursday expiration, I bought a 5,500 long call on the E-mini futures. So I'm just long a futures contract call. Looking to see if we can melt up, post holiday, get into Thursday's trading, get maybe a directional push, and try to find a round number. That's only like a $50 risk with an upside of possibly 2 to 3 times that if we hit 5,500 or higher. So I'm trying. I'll see what's out there this week. But like I said, I was kind of thinking pretty well diversified because if we take a look across the board, I think the weirdest thing about yesterday's move is. Congratulations, S&P. You just notched the 30th all-time high this year. You're creeping up towards 15% year to date. The Nasdaq's up nearly 18% year to date. But you're being carried. You're being carried by 3 stocks. I mean, the amount of gains that the Mag 7 or the Fab 4, the Fab 3 have been responsible for this year is incredible. This is certainly one of the thinnest markets that I've ever experienced. This feels even weirder than 2023 when it was all Mag 7. Right? Like you have so few stocks carrying the bulk of the market cap weighted ETFs. I mean, again, not that it's wrong. It's not like, oh, what if, NVIDIA drops? I mean, Frank, NVIDIA did a 10-for-1 split and it's still up. I mean, I don't even know what the price was when they split. 109, 110.
Yeah.
Is that about right? So, I mean, this is the equivalent of NVIDIA. If they didn't split, they'd be up $230 right now. So, I mean, it's up $23, which nobody gets excited about, but that is a huge percentage move from a 10-to-1 split. You're talking another 25-30% move in NVIDIA. It's insane, man.
Until that cracks, I don't think there's any real concern in the market because, I mean, we've seen days where all stocks are in the red and then Nvidia, and then maybe Amazon or Google is like up 1%.
Sure.
But an AI, Nvidia, that whole trade is just carrying us right now. But to be honest, after today, we don't. After last week, we didn't really see. There's really no more news for a while. But today was
Right.
retail sales that came in cooler than expected, um, or at least cooler than last month. So a lot of people are just, I guess, banking on that probability of a rate cut this year. As long as
Mhm.
retail sales, wages, inflation come down, then maybe it's a better chance we see that September cut.
Well, it's still up there. This is the watch tool is at 62%. So I mean, yesterday there were Fed talkers saying that they don't really want to cut rates in 2024, and it's like, again, it doesn't matter because fudge. Hang on a second, I need to find out my passcode for Schwab. I meant to do a text message.
They called you.
Yes, that makes yeah.
Gotcha. I'm writing it down.
Yep. Hack into my account.
Now I just need your social.
Oh, they got it wrong. I'll use a different method. I meant to do a text message. This would be way easier. All right, Frank, you're out, dude. No, let's get the text message. So I'm logging in because I decided to chart along, go off on Chewy. I've been long on Chewy since around $17. I've lowered my cost basis a lot over the last I've been in Chewy for almost a year. But I'm going to see what this P&L situation is. 0769.
So what have you been doing with Chewy? Is it like a wheel strategy, I guess, or are you
It was a combination of a lot of things. I was in with a bunch of credit spreads earlier. So when we got into this area on Chewy, this would have been from 2022's decline. Started getting to some credit spreads in here, made some good profit, lots of credit spreads. Ended up taking some assignment on these lows when it broke lower. So I've taken some assignment. I've worked my cost basis down. I'm about to see what my total breakdown is for Chewy. Let's go to accounts, realized gain loss, and see what my net position is on Chewy. So go to my individual account here. There we go. And Chewy. Okay. So I am currently sitting on, let's go from inception, transactions. All right. So I'm looking only at Chewy, all transactions to see what I'm in for. I should be up about $6 or $7 a share. I have 200 shares of Chewy. So I am currently in. Okay, I'm logging into my Schwab account right now. I'm just looking to see if it's beneficial to either one, let it run, two, put a stop loss in, or three, and most likely put in a covered call, because it's been a good run on Chewy thus far, and I like to protect it. I want to see if we have some additional premium in the covered call that I could take advantage of. And I think I'm not saying this is just like astronomical upside, but it would be nice to think that there's some momentum to kind of eat into some of this big decline we saw from this would have been, summer of 2023 when we had that July, August, September decline. Chewy was one of thousands of stocks that didn't benefit from the market, ripping higher in that October bottom in 2023. But nevertheless, I've lowered the cost basis. I flipped it for my larger portfolio. With break evens around like $15. I got it called away at $20. Everyone made a couple grand on Chewy. It only took about a month to do that. I've been in it a little bit longer. I'll blame my dog for that because I've been using their services for quite a while with prescription foods and toys and what have you. So anyway, so I've been a fan of the service, but anyway, the stock has been a little underwhelming. But the good thing is now it's in profit, and I want to see how much it's in profit.
So
anyway,
I use Chewy too, but I don't know what their financials are like.
Mm-hmm.
So I mean, seeing them pretty much at the lows, I guess the lows were around $15, but they're still very, very close to the lows in comparison to where it was in 21. So I'm wondering why, if you're willing to play it all the way down here, why would you want to get out of it now, or think about getting out of it now instead of just, maybe riding it back up, unless
Yeah.
you're not confident with how I guess they've been performing over the last quarters.
Yeah, it's not that. I mean, they finally turned the corner with profitability. I think they faced a lot stiffer competition than what they anticipated. I mean, their run they had in 2020 was, it's e-com, they're making money, they're, kind of the one-stop shop for all things pet supplies. But, I mean, if you go on Amazon, you can get mostly the same stuff. I mean, the nice thing about Chewy is their customer service is pretty solid, and they connect with your vet. So, I mean, if you need anything special, like in my situation, I've got a special needs dog. He's really not. He's just super high maintenance. But Chewy's been great. And so anyway, I think you're right. Like if I want just to sit and do nothing, I mean, the nice thing is I'm in a position with Chewy that if I have another, $5 a share, it's like, yeah, I'll be up a good chunk of profit. But I am looking at a total. Let me see where I'm at here. I've got 200 shares. I'm up about $4,700 right now in Chewy. So to answer your question, why wouldn't I let it run? Because I'm not greedy. It's like I'm up almost 5 grand, and I don't mind protecting profit. That's kind of my thoughts. I mean, this position for me is enough to give me about a 5% bump in my account. I'm okay with that, and I think that if I want to hang on to it longer, I could be, obviously benefiting from that. But let's say that this stock has a nice little recovery. I mean, percentage wise, we are coming off of the lows, and it's sitting up around 70%. I mean, a lot of times, man, and this goes back to the, how did you treat 2020 and 2021? I know that for me, I did let go of a lot of profits early, but when I finally started putting in covered calls and trapping profits, I was already sitting on triple digit winners. So I'm already up, let's say based on my break even around like 16 and change, I'm probably up like 55% in the stock price. Could I, hold out and be a little greedy trying to shoot for that 100%? Sure, maybe. But is Chewy the type of stock that's going to, guarantee the upside? I mean, I'm looking at profit right now. I can lock that in. If I think that Chewy has upside, which I think it is, I mean, I think there is, but for me, is it better for me to allocate that profit elsewhere? Or is Chewy going to be a stock where, let's say we test the highs and all of a sudden we have a range, right? Maybe this is a longer rounded bottom versus just the greatest recovery ever. So I think that's where I'm at. I mean, I don't mind looking at something like right now. If I look at a 25, let me look at the option platform here for Chewy. So because we've had a decent run, I could probably go out. Let's say I go out, 45 days into August, and if the premiums are decent, I mean, I could do a 25.50, lower my cost basis by $1.60, which I don't mind that. And if price goes up, and here's actually this isn't too bad here, Frank. I mean, I could go up to $30, give myself another $5 of upside, and still grab 50 cents of credit to get it called away at $30. That would give me a break even. If I lower my cost basis by 50 cents, it gives me another $5.50 of upside and 200 shares. That would put me up around like $6,000 on the stock and get it called away. So
Not bad.
I'm okay with that.
Yeah. I guess I haven't really been looking at individual stocks lately. When it comes to options right now, I'm just looking at SPY.
Yeah.
I'm doing. So yesterday I had a 1 day out call. I bought a call at the money, 1
Okay.
day out, early in the morning, which I don't usually do. I usually kind of wait till later when where I can buy it, hold it overnight, and then see where it runs the next day. Hopefully it's higher in the morning.
Mm-hmm.
But this time it ran up pretty far past where I initially had it. So I did take a day trade. I closed out just because I didn't want to hold it in the aftermarket. But and each day I think I'm just kind of doing the same thing. I'm positioning myself to sort of prepare for anything catastrophic because I don't really know what the market will do at all-time highs.
Sure.
it could just keep going higher, which would be great. But I do have slightly out of the money put positions for the end of the week, and they're pretty cheap. So if the market really does want to pull back, it's probably going to be quick and fast. So it could potentially hit that area, and I could pad my losses or maybe make money. But I'm positioned more so to the long side. So I'm putting more capital in upside on the SPY, and these are just going 1 day out each time.
Yeah.
And then I have a short position that expires at the end of the week that's out of the money, and it's not as expensive, but that's kind of what I'm doing now, just because the market is just moving higher slowly. Yesterday was a good day. Today, I can't imagine it would do the same move, but just hoping for, or not hoping, but positioning for higher gains, and then also trying to save myself if things go the other way.
So let's talk about that. How are you saving yourself for the other way? I mean, what's your your timeline or horizon? I will share with you. So yesterday, like I said, I mean, the market's up. The Nasdaq was up 2+%, pulled back to like 1.8. The S&P was up 1.25, pulled back to 1%. On a Monday, that was a pretty wild day. It really felt like that move would have been much more timely, or made a lot more sense going into last week. It's like there were so many catalysts last week. The fact that the market just bursted on CPI and did nothing through FOMC, did nothing for the rest of the week. I mean, whatever. I'm complaining a little bit, but it's like that's a very rare thing for Monday. Anyway, I have some exposure on the VIX that I was looking at. How cheap would it be if I want to go out even further and kind of buy some insurance on my portfolio? Right now, I'm pretty much locked into like an August VIX play, and that's not a bad position. But part of me thinks that the better trade, and I might end up having a loss on this. But if this pops up here, I don't need a ton. But if I get a VIX spike, let's say there's something that rattles the top three, and we have a bit of a decline, and intraday decline, and we could have like a quick. Let's say the SPY, for example, drops like 10 points in a day, or the SPX tries 100 points a day. If this VIX rips up here towards like 18, 19, $20, I'm going to turn this VIX call into probably a 100% gain or so. I'm not looking to be super greedy on it, but what I'm more excited about is getting positioned out into like Q1 of 2025, or into like the middle of 2025. I just want to, because right now, like, put insurance is pretty cheap. Right now, the VIX is pretty cheap. And so I looked at a bunch of instruments yesterday to see how could I, have some portfolio protection. And so the VIX is part of my play. And also, I know that Nick and I have talked about this, but are you at all interested in the currency side of being long the yen?
I don't really trade currencies that much, so not really, but
Okay.
I don't know. I'm curious to see what you're about to say.
Sure. So in the Forex world, it's very difficult right now to be long the yen unless you want to pay for it every single day. In terms of negative swap financing fees, the interest rates are obviously such a big discrepancy that you're going to be charged essentially a daily financing to hold the yen. So think of this: you're a fan of The Big Short. Think of this like what Michael Burry was doing with his positions when he was shorting the housing market and paying the banks the premiums on the derivatives that they created for him, right? When they created like the CDOs, and or not the CDOs, but all the derivatives for him to short and hold that position, he had to pay a monthly premium until he was paid out in the position. So it's not that extreme, but same type of thing in a Forex account, because you have a 0% interest rate versus basically anything else. If it's dollar yen and you're holding it short, well, you have a 5% differential, give or take, right? 5.25% differential. You will pay that every single day with your broker platform. So you might take a mini lot position for $1, and you might be looking at hundreds and hundreds of pips of profit. But if this trade takes months and months and months, you might end up paying hundreds of dollars in financing costs. So what I'm doing instead, for a little bit of light exposure right now, is I'm trading the FXY, which all this is basically like an ETF on the Japanese yen. There's two instruments that I trade quite a bit. Instead of being in currencies, I trade the FXY on the Japanese yen, and I trade the UUP when it comes to the dollar. So I'm not in the dollar right now. I'm not in UUP, but FXY, I did a 1%er yesterday. So I threw everybody in for about a 1% cut, a little tranche, if you will, of the FXY. And I know that this might not be the perfect spot. I might see this drift a little bit lower. But I do think that if I give this time, a couple things I'm looking to do here. And Frank, will you check something for me on your platform? Or if you're using Webull, will you go into FXY and will you check and see what go to FXY? And I was interested. I saw this yesterday. I was a little disappointed. If I went out to January 16th of 2026, I'm going way out there. I'm trading the FXY, like the Japanese yen, similar to what I'm doing on a bond. I want to go longer term. Okay. So go out to the 2026 expiration. The only one that I show here on Tasty Trade is January 16th.
Right.
And then go to a $70 call option. Okay.
So $1.75.
Okay. Now, can you review that trade and are you able to take that trade? Because right now my position says FXY is currently set to closing only. So only closing trades may be submitted. So I actually cannot take this call option on FXY through Tasty Trade for whatever reason.
It's letting me click buy.
Now, is that an instant? Like if you click buy, is that going to take the trade?
Yeah. So
Okay,
you
well,
place the order and it goes into review. And then if that window pops up, you're able to take it.
Interesting. Okay, let me check one thing here then. I'm going to go trade. I'm going to go FXY. I'm going to use my Schwab account here. And let's go out to January 2026. Let's go to a $70 call. And again, I mean, the pros and cons of this trade would be the following. If I'm anywhere in the next year, like now until this time next year, if I'm anywhere right where this instrument FXY is up here towards $68, $69, $70, I can turn $1.75 into probably I would guess based on the deltas, and let's do the math here. I can give you a rough estimate. The deltas are obviously going to change if I get closer to at the money, but right now we'd be trading a 23 delta, and let's say that 23 delta becomes 50 delta. Well, even if I had a move for currently trading at 58, let's go up $12 at a 23 delta. This is a really conservative calculation, but if we go up $12, it's actually $11.50. At a 23 delta. So I can take $1.75, turn it into 264 plus $1.75. I turn it into about a 439 credit. So I could take about a 250% gain if that's all that happens. Now that's pretty good. And obviously it can be worth a lot more than that, because if I have a lot of time premium left, this could maybe be trading for maybe $5, $6, $7. But the risk on the trade would be everything that I'm paying for it. So what I'm thinking is I want this trade way more than I want the ownership of FXY. Okay. But the problem with this trade is the timing. If I get this timing wrong, and that's why I'm saying I'm going out to 2026, I'm essentially saying, you know what, somewhere between now and let's say Q2, Q3 of 2025, I want this Japanese yen to get really, really strong. And if that happens, it's a great trade. I could put, maybe a 1 to 2% risk on for these call options, have this thing pay me 200 to 300%. That turns a 1 to 2% risk into a 2, 3, 4% profit. Again, that's go ahead.
Why are you bullish yen? First question. And also just based on what I've seen with the monetary policy, unlike the Fed, the BOJ is not very transparent. So it's hard to tell what they're going to do with the yen. And I never, every time, like earlier in the year, we saw something where they were going to be, I guess, stricter on their monetary policy, but then it ended up not being the case. So what has, I guess, why take this trade now, and what makes you think it's gonna be a stronger yen in the future?
Well, because the Japanese yen, so their banking system, I mean, they have a lot of yen out there with loans. It's still considered a safe haven when it's appropriate. I know the monetary policy situation is super extreme with the Bank of Japan, but if there is a unraveling of this carry trade, if there is a deleveraging, which at some point I strongly believe that we're probably closer to that than we are away from it. I think that the the deleveraging we saw in 2022 is right back on the table for another round of it in 2025, let's say 2026. Again, I could be dead wrong on the timing, and that's on me. But I think that as we go into this kind of Goldilocks year where the market can do no wrong, I did see a print from Goldman today that it's like, this has a very similar flavor to 1995 when the Fed cut from 600 basis points to 500 basis points, and that was a soft landing. And we had this great bull run until 1999. I don't know if we have that good of a run until 2028. I mean, part of me is very skeptical going into a new election, current administration or new administration, that we have gotten to all-time highs to this degree, to this extreme, by being basically on the backs of so few stocks. So I mean, again, how could I be wrong on the trade? If the broad market does in fact catch up, then we've got I'm wrong on the FXY, but I can take a 1% risk and be wrong and have the rest of my portfolio pick up the slack and be fine because the broader market is up. But part of me is, I'm not saying this is 2008 proportion, but this is what happens when, look, this is a positive swap trade here, Frank, right there. That's all positive swap. That's all positive carry. And that's what a deleveraging looks like. Okay. This was all positive swap, positive carry. That's what a deleveraging looks like. This is all positive swap, positive carry. So it's a cycle where if we have a bit of a correction, it would make sense that we could see some, maybe 2, 3, 4,000 pip moves in the yen crosses. I mean, you go into the yen pairs just in the last couple of years, the correction that we saw back in late 2022 into early 2023, this was effectively when we had all this pushing here in, let me go, I think dollar yen is probably a little bit easier barometer. So right in here, we had this, huge rip to the upside. So 2022, big rip to the upside. End of 2022, massive correction, back to the carry trade, and it's been alive and well since 2023. So I have been saying this entire year, 2023 into 2024, don't fight the carry trade. It's not worth it. The yen's been crazy fickle, and also this intervention stuff is driving me crazy, which is why I'm not looking to trade it in Forex. I don't want to get dinged every single day to hold it, right? So if I'm holding the FXY, it costs me nothing to hold it. If I have a broker that charges commissions, I pay the small commission to hold that instrument. And I might not pick the perfect bottom, and maybe the better trade is to wait for this thing to break the trend line, But
we'll be
eventually,
premium, though, until there's,
well,
I guess, a move.
But I'm not buying the option yet. That's my point. Like, I'm just going to buy FXY. I'm not paying for an option yet, because I think that if I paid for an option, I'm wasting that premium. I'd rather have a little bit of time pass. If this price doesn't do anything, I'd rather let time pass and not force a trade. But what I am saying is, what I will probably do is, if I'm a little bit more confident this trade is finally taking off, and there's no reason that it's going to be like a V bottom. It may not rip like this. It might take its sweet time and be sideways for longer before we have a move like that. But for me to wrap up, maybe like, let's say 1 to 3% risk in this trade. If I get the upside, as long as that pays me asymmetry, where I can get, maybe 2, 3, 4x that return. How can I do that? I can put some Japanese yen futures exposure. I can trade some options on this. And so what I'll probably end up doing is, I like 70 to 72 just because I think that's a reasonable spot to get back to as far as price movement. And also, if I were to stagger these, it's going to be a little bit more expensive. But if I did like a, 64, 65, 66, if I stagger those up to kind of build up that position. So again, it's just thoughts. I mean, I want to share this. Like, I finally decided, like, I'm going to take a little bit of a stab at it. So I did a 1% stab yesterday on the FXY, and I'm sticking with it for right now. There's no hurry in this trade. If I don't do anything on the option side, and I'm somewhat correct in the next, 1 to 2 years, then I turn my 1% into about a 0.25% gain for my whole portfolio, because it's about a 25% move to the upside. So if I have a 1% risk and I make 25% of that trade, I'm making a 1% for my portfolio. That's not enough to get me excited about this. That's not moving the needle for my portfolio, right? So what I'm trying to do is have a base exposure, core position that I can build around and then turn this into a much greater gain if I'm right. But I think what I'm doing now is testing the area, and then I want to get a little bit more confirmation and then see if price will actually support my theory a little bit. So I know that, look, I know the yen pairs are going to be super crazy and super sensitive, and I wouldn't be surprised if the yen gets weaker until it gets stronger. But I'm just throwing it out there. Maybe I am, if you want to mark this June 18th, 2024, maybe I'm way too early. But if I give myself enough time, I would think that out through 2026, I think 2025 is going to be a bit of a reckoning in some cases. I think we're going to have a bit of a correction phase in 2025. I think. I don't know. We'll find out. But
I think
I'm
you're right. I mean, I can't just say that you're right and say like that's going to happen, but
sure.
I think all the things are laid out for us now, but because of we're entering a sort of a lull in the markets and we have this presidential election coming up in November,
Yep.
it's almost like something's going to keep it from making any crazy moves to the downside. But once the tension's just going to build up, and once next year hits, once the election's over, and maybe the Fed finally cuts too, I don't necessarily think that's a bullish thing. I think the hype around a cut is the bullish thesis, but once they start
Agreed.
doing it, we've seen interest rates come down, and that's when also the market comes down. That's when the recession happens. So if that pattern continues, then yeah, we could see that massive deleveraging you're talking about in the yen, and we can see a crazy move in the markets and weaker dollar, just lots of things going on. But right now, I don't really focus on sort of the long term picture yet, just because
Yep.
in the meantime, I can put more capital into short-term gains, and I look at the VIX, I look at the market. Every time the market or the VIX hits a new low, I look to sort of short or build a long position on the VIX. Uh,
hmm
every time the VIX spikes, I look to rebuy. But I mean, for the past month or so, I've been really heavily increasing this bearish like thesis I have, but I just don't want to trade against the market if it's not going to go where I want it to go. So
Yeah.
just for now, I agree with you, but I think I'm just taking a different route.
Yeah, and like I said, I know that I'm look, most traders that maybe are in this chat, most traders that I talk to aren't thinking 2 years out, you know. And for me it's like, why would I do it right now? Because it's a 1% risk that I can sit on. I would happily cost average into it. But I've got all the time in the world to sit and not be exposed to the day-to-day financing in a Forex account. So this for me is, as much as I am not trading the yen in my Forex account, I'm willing to have a little bit of exposure that doesn't cost me anything to just hold the instrument with the FXY. But you're right. I mean, let's talk just the major indices right now. I still think as we enter into a lack of news, no major catalyst until we roll into. I mean, think about this: we get through this week's holiday trading. We have a couple more weeks until the month is over on the 28th, and then you get into another holiday season with July. I mean, we're still in this kind of perfect environment where it's a low volume. There's enough disruption. There's summer times where it's not like full on trading. I mean, as a seller, part of me hopes that something like this happens, Frank. I hope that it's not just some one-day sell-off and then the market just, buys the dip immediately. What I'm kind of hoping for, if we're going to have a correction, is that this market just either goes a little sideways, continues to melt up a little bit higher, but we're sitting right on this really nice technical side, just like we had here. The sign was right there that we had a chance to sell it, and we did, and we made some good profit there. So if we start to just watch this trend line, this would be where I'm watching for structure to break and then offer a bit of a correction. But until that happens, man, I think we are just straight up in. I hate the fact that my a lot of portfolio gains right now are just strictly based on momentum and the top three stocks. If you're in Apple, in Nvidia, in Microsoft, or in Google, or in Meta, or in Netflix, or any of the Fab Four, whatever, all those storied stocks, if you're in those, so far it's been a great year. I'm probably early with some of my big asymmetric trades. I'm early in China. I thought China was lined up really nicely. I think that Alibaba and Baidu are still, these big like cash cow sleeping giants, but they're not there yet. I mean, I was going to swear there for a second. Baidu has made a fresh low, dude. I mean, this thing ripped up from $94 up to 115, had a 23% rip, and then came back down and broke the lows. Now I'm sitting in Baidu with a couple of assignments. I have a break even at $90 and a break even around 97. I'm just looking to repair the stock a little bit, but to me, longer term, I mean, again, I was hoping that this area was okay. We have this kind of left shoulder, head to neck line. We've pulling back here. We had a nice little falling wedge. We're starting to show signs of confirmation. Off we go. I was looking forward to maybe a nice, global rally where it's not just the U.S. right. Like right now, what does the market feel like is being carried by? The Nikkei's pulled back since May. The DAX has pulled back since May. The Hang Seng and the Chinese markets have pulled back since April and May. I mean, nothing is up except for the U.S. market, and it's not all U.S. markets. It's the SPY and the Qs, right?
Yeah, so
it's only the U.S. market, and it's only two of them that are market cap weighted. So it's not a global rally. It's not a broad market rally. It is a thin, narrow momentum trade. Which I'm not sitting here hating on this trade. It's like if it's helping your portfolio and you're making money, I'm super happy. All I'm saying is, man, if all I had in my portfolio was Nvidia and Apple, it'd be great. But I would be protecting that profit and trailing that profit and locking in profit just to be safe, because I do think that it's underneath. It's like it's a bit of a house of cards unless the broader market starts to pick up the slack. That's my one concern. Is you don't see healthy bull markets only run this concentrated and narrow. Healthy bull markets are the Dow and the S&P, or the and the Russell. So you have to have a small, mid, and large cap rally, broad market, to have a healthy bull market. So it's just not that right now. That's all.
Yeah, you're absolutely right. It's a very thin market and it's not healthy, but it's still going up, which is the problem. And what does that tell you? Baidu's down every other stock other than these big tech names. The market is just getting thinner and thinner, and this is the COT data sentiment we have. They're exiting the market. This is like the fourth or fifth week in a row where they're getting out of the S&P, the NAS, the Nikkei, the Dow, and they're buying bonds. They're betting on lower yields over time. But that's it. They're not participating in this upward run with the market, because when you have a market this thin, it's just not a sustainable one.
Sure. And that's good to know. I mean, good to know smart money is finally starting to move around and transition and rotate a little bit. Look, I'm sure that for the most part, you've got, hedge fund managers and smart money and institutions that are doing pretty well. I saw this big allocation with this, tech ETF, or this tech fund that's going to reallocate like 20% of its allocation just to Nvidia, and go from like a 6% to 20%. And it's going to swap Apple for Nvidia. And again, not that that's bad. I mean, heck, dude, I want to buy Nvidia. I put in a ratio spread in Nvidia to own it at like 90. I think I did it right here. I've got Nvidia in here. I mean, I'm going to make some money on the trade if it doesn't go anywhere other than up. But what's my trade on Nvidia? So Nvidia, I have a July 26 ratio spread. Oh yeah, I did the 80 by 95. Is that what I did? That's out to July 26th. So July 26th here. So I am doing, this is ridiculous, dude. It's trading at like a 3 delta. I'm buying the 95 put, and I'm selling the 80. So I thought, if I'm going to own Nvidia, let me own it at the level I want, which is going to be, like $65. Dude, we're never going to see, I mean, we might never see $65 outside of literally having a 50% correction on Nvidia right now. But I can't look at this chart and say I'm excited to buy this thing. Like right now, even after a 10-for-1 split, I'm not excited to buy Nvidia. Not even close. Like I don't buy this. I don't buy the rocket ship. And that sucks, because sometimes when it's higher, that momentum keeps ripping. But there is a saying out there that when the market goes up like this, it doesn't correct sideways. So when this usually goes up, it's correcting this way. And so that's what I'm looking for, is if we have a deeper correction, or it goes up and it pulls back violently, that might scare everybody out of Nvidia. And then, maybe I can take my stab at it for some ownership.
Right. You do want to buy it anyway, when no one else wants to.
Exactly. What's up,
What's up,
Nick?
guys? I got
You kicking us off?
I'm kicking you guys off, and I think you're wrong about the market. It can go up forever, and it only needs Nvidia. And get off the stream.
That's it, man. We are dead wrong. We are totally the wrong guest to have today.
Let's back it up.
No,
right.
I'm kidding. I was listening to you guys for a few minutes and totally agree with everything you said. You need the broadening, but we've got a guest coming on behind you guys. So thank you both for taking over, holding the stream down for a little bit before we transition. Everybody who's listening, Chris has his own YouTube channel. We're going to be dropping the link. Here it is. Boom. Go subscribe to Chris Pulver. And if you're watching on Twitter, it's at Real Chris Pulver to find his handle. Keep up with him. And of course, you can find Frank and I every day here on the A1 Trading live stream. And with that said, Chris, Frank, we'll kick you guys out. We're going to do a quick transition. Then we're bringing in our brand new guest of the day, Nick Phillips. So stay tuned. We'll be coming in right after this. Thanks, Chris.
Thanks, guys. See ya.
Thanks, Chris. See you.
If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, guys, and we are back to the live stream with our next segment and with a brand new guest. Today, we've got Nick Phillips joining the live stream from North Carolina. Is that right, Nick? Hey, Nick, how's it going, man?
That is right. What's going on? Thank you guys for having me on.
You're more than welcome, and I'm excited about this. I've watched some of your content over the last few months, and I know that you're a good mix of fundamental analysis and technicals as well. I think we have a lot in common on that front, and I'm curious to hear what you're kind of getting into. I'm curious just to introduce yourself, Nick, in terms of the live stream guests who may not already know your content. Explain a little bit of your kind of approach to the markets. I know you've got the touch of fundamentals, but just give us a little run through on kind of what you trade and how you trade.
Yeah. So what I've traded over the years is actually changed drastically in the last year. I was traditionally a technical only trader for the first really 6 years of my career. I'm in the middle of my 7th year right now. Started back in 2017. So what I trade now at this point, what I've been trading for the last year, I've really found my edge in trading red folder risk events. So as the data drops, I tend to scalp the data. I don't get in. A lot of people get this confused when I first say this. They think that maybe I'm entering trades ahead of the data, like trying to catch the spike. I'm not doing that. I am scalping the 5, 15, and 30-second charts after the data drops. If we get a surprise, if all the data gives us a surprise one direction or the other, I'm jumping in and getting, a quick 1-to-1, kind of really grabbing low-hanging fruit. So the market's reacting and pricing in new data. If the market's agreeing with that data within the first 5 seconds, 5 to 15 seconds, I'm getting in and jumping in that direction and getting out and then walking away for the day.
Very interesting.
Yeah.
So you're trading like lower time frames specifically. You're watching currency pairs mostly, right?
Yes, mostly currency pairs. I run an analysis for my private group for equities and gold as well, how this data should affect it. I do have more of a intuition or a feel for how this data should affect currencies more so than I do equities all the time. There are times where equities move in relation to data that really doesn't make any sense to me.
Mm.
I look at it and I'm like, it's not making sense. Whereas when I go to currencies, usually, if the market isn't moving in response to the data the way that I maybe think it should, I could find an explanation for it in other data,
Sure.
if that makes sense.
Yeah, that does make sense. And a lot of times, like for example, retail sales might make a little bit more sense if you're looking at just the dollar or just the euro against the dollar, right? Because then you have with retail sales, it's pretty binary. If you have strong retail sales, that's strong for the dollar, and if you have weak retail sales, it's weak for the dollar. But it's kind of mixed for stock indices as we saw today. So that's
Right.
awesome. And so you're getting down on the lower time frames. You're watching, and as you mentioned, you're specifically trading after the release. So I guess today, were you trading retail sales numbers at all?
So I watched it come out. I did not like it because although we came out under expectations, they were right at the bottom of the bank ranges. So that median forecast that you might get on financial or Forex Factory or something is the median of the range from various financial institutions, and the numbers that we got were right at the bottom of that bank range, so there
Sure.
was really no surprise. And on top of that, I tend to not trade retail sales as much because the surprise factor, it's not as frequent as other pieces of data. So more often than not, retail sales really doesn't surprise. Today we did get a decent surprise, but it did not fall far enough outside of that bank range for me to like it, so I stayed out.
So you're looking when it comes to a piece of data, you're looking for some significant beat or miss in terms of looking for just kind of trade in the same direction. So like if you had jobs data come out incredibly strong, like let's say the employment change number, the NFP number came out at like 275,000 jobs compared to a forecast of like 180. That would be something where you're looking to like jump in long on the dollar. Is that kind of what you're thinking?
Yes, it also depends on the bigger picture. So like recently, we haven't been trading strong labor data because the Feds have mentioned multiple times in the last few FOMC meetings that a strong labor market is not a signal for them in any regard to monetary policy, whereas weak labor data would be a signal for them.
Mm,
So it all comes back to what for us, it all comes back to monetary policy, right? So it's not just a beat or a miss, it's a beat or a miss with implications towards policy.
sure,
And so
sure.
with the Fed saying a strong continued strength in the labor market isn't going to, they don't, at this point in the game, it doesn't matter to them. Cool. At the beginning of the year, all the way through April, we were trading strong labor data. Anytime that we had strong labor data hit the market, I would take US dollar upside. Um, Likewise, weak labor data, US dollar downside. But now, at least until the Feds change their tune, it is all, if we get strong labor data, I'm most likely not going to trade it. Now, there is caveats to that. We had a significant number with the last NFP. And so
Hmm.
I'll take a stab at that. That, it's little nuances like that where it's kind of with some experience, you'll want to take a really strong NFP print like that no matter what. I could take a real quick stab at that, but um, not right now. For the most part, I'm not trading strong labor data.
Sure. Yeah, that's an interesting point because it really is when it comes to like economic data, people will oftentimes wonder why, a candle could look like this after a big print. And it really, it comes down to what did the actual data, was it actually surprising enough to get a big move? Oftentimes you get volatility. You almost always get large amounts of volatility on something like a NFP event. But the
Right.
question is it volatility just for the sake of being volatile, or is it volatility because it's making a directional, decision? Like if you had just, again, for the dollar, let's say we're looking at, if you get this sort of print, that short term was a big surprise to the market. It caused the dollar to jump massively. And there is potentially some scalping opportunity in there if you're able to really understand the fundamentals and spot them immediately. Like you got to be real quick on the button, right?
Right. Yeah, yeah. We're getting in, like I said, most of the time within 5 to 30 seconds. Sometimes there's another sort of secondary entry opportunity that could present itself that happens about, 2 to 5 minutes afterwards. If we get like a slight pullback on that initial candle, we'll jump in. Again, that makes it a little bit more difficult as far as assessing risk, because once you start to get that pullback, it's like, where is it coming back to before it continues in the direction? So I like to get in as soon as possible if we get surprise data, and then get out once I hit a nice 1-to-1 or a potential zone. And
Sure.
so if I hit a 1-to-1 and we're still in no man's land on the chart, headed towards, a new 1 hour zone, then I'll go break even and I'll let the trade ride out until it hits that zone. And then maybe start to take pieces off the top as I'm going.
Gotcha. Yeah, that makes sense. And again, what's cool about these live streams, Nick, is we just bring on people who do all sorts of different things. We have people who do fundamentals. We have people who do technicals, a good blend of the two. It's just cool to have people of all different styles. Do you do any sort of like longer term chart analysis, or do you completely stay on the low time frames? Like, do you look at like a 4-hour chart or a 1 hour chart on the dollar index to kind of get a general bias built before these events? What do you do kind of outside of the news scalping moments?
Yeah. So chart time, I'll answer this in two different parts, right? So there's the actual, excuse me, I think I just hit my mic. There's the fundamental, all the data that isn't on the chart. I tend to gravitate towards consuming as much of that as possible. So
Mhm.
I keep a good idea of where we're at on the macro scale with all the major currencies. And then I look at risk assessment, like risk sentiment, before hitting the 1 minute charts. I kind of see where we're at on the day going into a session. Are we risk on? Are we risk off? Do we have mixed risk sentiment? Is that coming into factor at all? I tend to look at the equities and see if they're trending up or down. So as far as looking, like, I look at everything.
Sure.
Now I say everything. I was watching Chris a minute ago, and that
Mhm.
dude is looking at everything.
Chris is the master of everything. He's truly he's even more diverse than me, because he's doing everything from FX to options to all of it. So
yeah,
um,
yeah.
yeah, he's got a
That was
diverse list.
that was interesting to see. I was watching him. I was like, man, I thought I looked at a lot. He looks at a lot.
Yeah.
Um,
Well, I
but yeah,
think Chris also, he incorporates a level of fundamentals to his approach, as well as, Frank and myself and the cast here. We're pretty fundamentals focused, and with that, it does sort of end up being why would you only look at one market when they all communicate the same language? I mean, once you're kind of on the fundamentals train, there's no stopping which market you can look at. Like, if you really understand how retail sales figures impact, you can trade over a pretty wide basket of different things. It doesn't have to just be currencies or just gold or just stocks. It can be a nice diverse list of things where you can find opportunities. Nick, I want to ask you really quick, if you'd like to share your screen and walk us through any charts that you'd like to, you're more than welcome to. Totally up to you. There's a little share button at the top, at the bottom. There's a little present button right by the camera and mic settings and stuff. It's like the third over from the right. Just click present. You can share your screen if you'd
let
like.
me see. Go ahead and share this. Oh, give me 1 second here.
No problem at all. Yeah. So like I was saying, the cool thing is you just get a very diverse list of things that you can pay attention to. I personally, I trade sectors. I trade some currencies. I trade, TLT, so bonds. I trade gold and stocks. I mean, we're pretty diverse on the streams, which make it interesting, because whatever viewers are interested in trading, if you stick around long enough on the live stream, we will talk about it, which makes it kind of fun.
Yeah. So I've been checking out the stream the last few days, as far as like all the different guests that you guys have, and I have been noticing, just a wide array um, of styles and approaches to the market, and different data point. It's very interesting. I'm definitely interested to jump into some more of those conversations. I'm trying to get my screen to share. I'm having this Chrome has lost permission to capture your screen issue. Give me 1 second here.
Oh, no problem. If you want, real quick, Nick, you can refresh the page you're on and back out of the live stream, come back in. That might offer you the button at the top left to like allow for camera and mic if you want to try that, or
Yeah,
allow for screen sharing.
Let's see here.
And for those of you guys who are keeping up with what we're watching here, we've got gold is trying here, it's having a positive day. Stocks are kind of flat on the day still. Russell is slightly positive. That would tell you that yields are probably dropping. Yields are in fact dropping. Yep, yields are still dropping. Good for TLT. TLT is making a move here nicely. So that's been positive. We got TLT making a move. We got gold again struggling. We're still just range bound on this gold trade. I would really like to see gold make a push and break through this 23.35 level. That has just been the barrier recently. We'll keep tabs on that. So that's kind of what I'm thinking on gold, but we'll give that a shot. Okay, we can bring Nick back in. Hopefully that fixed it, Nick. But no worries either ways. If we need to sort it after stream or off camera, that's good too.
All right, let's see here. Oh, you know what? I think I understand what is happening.
Yep, no worries either ways. While you sort that out, Nick, I'm just going to keep going here, just check up on everything for everyone. So we got S&P flat on the day still. Nasdaq's actually looks like Nasdaq might be trying to break lower here, which is interesting. You've got a candle closing potentially underneath. This is an hourly candle, by the way. We're looking at the 1 hour chart. Still got some time on this candle left. You still got 40 minutes to go, but if you do get a candle close here, maybe the Nasdaq has a little bit of a pullback, but I'm just not holding my breath with this thing any longer. The Nasdaq has been so strong recently. It's been hard to wait for pullbacks and things like that. But I can't justify, as Frank and Chris were talking about earlier, it's tough to really be a buyer at these levels. It is wanting to trend higher overall. So that may just, truthfully, this may be the biggest pullback of the day. And you may see this thing keep going higher. But again, I'm not going to get caught up in the short term kind of bias of thinking that the market just can't ever come down, because it will. And I've talked about this a lot, but when the market truly comes down, you'll know, there's no question, because it will change directions and it will be kind of violent. And will that be sooner rather than later? I don't know. I kind of think that you're due for a pullback, but I'm not necessarily calling for a bear market turnaround. I'm thinking that if you get concerns about inflation staying sticky, if you get, rising probabilities of recession, those sorts of things can paint a picture that could lead us into, a 5-10% pullback in the Nasdaq, in the S&P 500. Again, gold is up on the day here, 0.25%, which is not saying much, but you've got to show respect to gold considering it was down like 0.5% to start the day. So the range on today's movement is almost a full percent to the upside. So from the lows, bouncing back, came back strong. So it is a, it's an impressive rally here, especially on a day where you got the Nasdaq in the negative territory. I am also very impressed with TLT. Again, this is another signal inside of the group that's going pretty well, floating a nice profit on this one. I've been holding on to this one for a little bit, but we're seeing some nice progress. Dollar Swiss, the signal there is continuing lower. Just a shout out earlier, if you missed it, we are currently doing our 50% off sale for the Discord VIP room. If you're not already in there, take advantage, get 50% off. And if you're watching with us live, check this out. If you click this link, got a special stream offer. If you click that link, click the VIP Signals membership, 55% off. You can currently get an extra 5% off the discount. That is the biggest discount of the entire year to pick up a membership with us. If you're not already in the Discord channel, highly recommended you come join the action, get access to all the trades that we're taking when we take them inside of the Discord room. We also do coaching webinars and so much more. So check it out if you have not already. Okay, so yep, S&P still flat on the day. NASDAQ, we'll see how this candle closes. I'm curious to see if we get some downside there. All right, Nick, I could see your screen now, which is awesome. We'll pull it up when you're ready, but once you get over to your charts, we can try and pull that up.
All right, let's go. All right, sorry about that.
No problem. Okay, I think we're good. Now we can see your screen. Cool. We can see it.
All righty. So to touch back on some of the questions you were asking me earlier about, you know, how I look at things when it comes to the dollar index, or really any of the things I'm looking to get involved in, I've actually transitioned this year from trading CFDs on, you know, unregulated offshore brokers, because I'm US based,
right,
to trading Forex futures. So
okay,
yeah, I lose a little bit of the availability or the ability to trade cross pairs, which is, it's a little bit of a trade-off. I still have money in the CFD space, but I haven't touched my CFD account in months.
Yeah,
because I mean, the price of trading, the price of scalping is significantly different on futures.
Is it better? Is it, because I don't trade futures personally, so I don't really know that much about them. Is it an improvement?
It's significantly better. It's a palpable difference, a very palpable difference. Yes, yes.
I imagine, especially for scalping, because your executions are more frequent, you're going to have more costs. But if there is an advantage to futures, that's awesome to hear.
Yeah, there's a huge advantage. You feel the difference. The spread is, you know, nearly non-existent at most times, especially the way that I trade when I'm scalping data. If you're trading on CFDs, the spread on CFDs within the first 5 seconds of being, you know, data dropping could be like this. And so my order fill, if I'm, you know, I'm buying, could be up here where the price was actually down here, and I wanted to get in, you know, even just closer to this area.
Sure.
But you don't get that experience at all with futures. It's, you know, where price is where you're getting in, and commissions are like so low. It's not even funny.
Very cool.
It's a very palpable difference. And just as a US trader, you know, on the prop firm side of things with CFDs in the last, you know, year to 2 years, all the, you know, I'm sure your audience is aware of the turbulence that's, you know, been happening with a lot of the CFD prop firms.
Right.
There was always kind of this underlying, and even with brokers, there's this with unregulated brokers, I should say. For me, there was this underlying feeling of, you know, I spent 4 years unprofitable, didn't make a dime. And then year 5 and 6, I made money. But there was this underlying feeling of, man, like, am I going to get paid out consistently by these brokers as I'm making money? I had a few experiences with brokers where I didn't get paid out. And it was this layer of psychological hindrance to like, dude, trading itself is hard enough.
Yeah, right. Exactly.
Add this other layer of, you might not even get paid if you're performing well. It going from that world and having those questions hanging over my head with Forex to going and moving into futures and being part of a regulated market, having direct data feed from the CME, it's alleviated a lot of pressure on the mental side of the game.
Yep, I'm totally with you on that, Nick. I moved over. I mean, I've traded on a stock brokerage because I do a mix of options and you know, ETF trading for the last, you know, many years. But just kind of really putting all my capital into that spot has really just been so much better, because again, there's no questions as to whether or not a broker is going to pay you or things like that. So unregulated is not even an option, you know, for me anymore. It's got to be regulated or nothing. So that's cool to hear.
Absolutely.
So you've got the Australian dollar here pulled up. So walk us through a little bit of like your thought process on whether it's the Australian dollar or a different currency, whatever you're looking at. Walk us through like kind of your analysis phase.
So this is what I tend to do. You know, scale out really to like the daily or the weekly, just to get an overall idea of what's happening at a macro perspective with something like the Australian dollar. for me, the last couple months is really what's going to be most important. We've seen a little bit of a bullish push here on the Australian dollar since, mid-April. It, what I tend to do is I look at this chart for about 3 seconds just to get an idea of where we're at. And then I'll drop down to 4-hour, check out some of these areas, mark up some zones. Let me make this chart a little bit bigger here. I'll mark up some of these zones. This is a pretty hefty resistance level, decent little support in here. And then these are zones that I target once my risk or red folder event pops off. So I tend to like to see an area where prices reacted heavily from, tapped into multiple times. And so I do this on the 4-hour, then I drop down to the 1-hour and get a little bit more, give it a little bit more detail as far as there's another zone for me that exists in here where prices tapped into 1, 2, 3, 4, reacted from here 5 times, acted as support in here. And then once I get beyond 1 hour, I don't really mark up zones into 30 minutes or 15 minutes. Now, what I will do ahead of the day or as I'm going into a session, if we have a 30-minute, like this is the 30-minute chart coming into New York session, right? We had retail sales here pop at 8:30. So what I would tend to do, this is a little bit of a different scenario than what I would like, but let's say this price action hadn't happened this morning and we were just operating within this little consolidation zone, which is what I tend to like to see. I'll use a breakout. Let's say we get dollar weakness out of the data like we got today. As soon as price is breaking out of here and holding above here on like the 2 or the 5 minute, this is a good confirmation for me that I want to be involved in this trade. And there are times where I will hold a trade for the entire day, depending on the data. And having a good consolidation zone like this, where price breaks out of it, holds above it for a while, gives us a nice little pullback with a continuation move like this nice engulfing candle here. This is a decent little secondary entry opportunity for me for the day. Again, I would likely be involved on the 5 second. It's going to look disgusting, if you're if you're not used to this, like, but I would like to get in here within the first 5 seconds. 5 to 10 seconds, I'm getting in. I'm not allowing a position. Now, there's a couple of ways I trade this, but most recently it's been, inside of this initial catalyst candle, I grab my 1-to-1, and because I don't have really any spread or any commission, I just grab this low hanging fruit off of the data. Now, this is where, there's people that trade data a little differently than me. They trade the spikes a little bit differently than me, where they'll set pendings on either side of like real recent price action. And I don't like to do that because the data could come out mixed. And so I like to say this because, for the audience, sometimes it could be tempting. You see somebody like me trading this way and you think, oh, well, all I need to pay attention to is the spike. Whichever the initial spike comes out, I'll just jump in that way. It's like, no, not really. Like, because you have to look at the data and make sure that the data comes properly, and then you want to see this spike happening. So the data's first for me. Make sure the data points for a weak dollar, and in this case, I wanted strong odd. And if the chart is reacting well to that, then we're good to go. But if the data comes out mixed, I mean, I don't even care. I just walk away.
Yeah, that makes sense, because again, you can have those big candles where they will shoot in both directions, and people will who don't kind of fully understand the fundamental like kind of story that a piece of economic data can give you. If they just see a candle moving in both directions, their opinion on news is, oh, it's just gambling because it just goes back and forth. But if you understand that, if you're able to understand what a particular kind of piece of information tells you about the market fundamentally, there's going to be a flood of money that comes in or out of a position if the data is super decisive. Like,
Right.
for example, everybody and their mother and brother in the market is watching for CPI data to come in cooler or hotter than expected. If you had 3 point, like let's say you're looking at inflation, and I think we're at 3.3. But let's say next time they expect 3 point, and if we could show my screen for a second, Chandler or James, I'll show you this, 3.2 or something like that. Like that's what the forecast is. Like if everyone is forecasting for 3.2, but then what you actually get is 3.5, there is probably a pretty dang good chance that if you were to long the dollar quickly, you could spot immediately long the dollar in that moment, because forecasts were inflation to fall. It actually rose substantially on a year-over-year basis. There's probably some serious money that's going to flood into the dollar and out of risk on assets. So there are those kind of moments in time. They are pretty rare, but when they happen, when you get a huge beat or miss in the economic data, the news candles, those are usually where you're going to see decisive one-way candles, whether red or green, and where there is probably some money. But as you mentioned, if you see everyone is forecasting a 3.2 reading, and on the event you actually do get a 3.2 reading, the candle could look like this after 5 minutes, because it could just completely go in both directions, because there's some volatility that spikes, but then it erases because it wasn't really a big surprise. Is that kind of what you're thinking too? Like overall, that's the story?
Very similar. Now, I will say there's a little bit. If we can pop back over to my screen, I'll show you guys a couple things. Some of the ways that I trade it that's a little bit different than maybe just this forecast that we get. It doesn't tell the whole picture, right? This forecast being a median of the major financial institutions in the US for US data that give their projections, right? It's kind of the average or the median of those numbers. So there's a range that exists there. So Financial Juice, I have the pro version, but I think on the free version, you can get these articles. They do a pretty good job of giving you the bank range figures right here. So these are their articles every day. They present something like Morning Juice. And so for retail sales this morning, you can see the median forecast for month over month they have is 0.3. Let's go check Forex Factory and see what that is. Yep, month over month, 0.3. But the range for that was 0.5 and negative 0.1. So at the top of the range, you have voters saying that they expect the numbers to be 0.5. And at the bottom of the range, they had it at negative 0.1. What did the actual come out as? Actual came out as 0.1. So it was actually inside the bank range. And then now I have access to another terminal here through a Discord group that I'm part of that gives me, you can't see it now, can you? Yes. Okay, so these were the numbers this morning. And we had the low of 0.1, a high of 0.5, and a low of negative 0.1 and a high of 0.6. Now you can see the actual came out right in line with the low for both instances. So that's why I stayed out.
Fair enough.
Because there was no surprise. It was a surprise for the median, right? But for me, my edge is present when it surprises the range figures. Now, there's times where I may take a stab at something like a more important piece of data like CPI. If it doesn't surprise the low, but it surprises the forecast, I'll reduce risk and get in real quick. Like if my normal risk is 0.5%, I'll go 0.25% or 0.1% and jump in and just try to grab, some real quick low hanging fruit off of that and get out.
Fair enough. Yeah, I like it. And that's, again, a very, very important distinction to make with these, news trading strategies, is that if you're going to trade them, as you're pointing out, you really want to look for the outlier, big surprises because you're essentially betting on like volatility. You're betting on things to be extremely volatile and push and follow through. And in order to get that volatility thrives on surprises, right? You need something that's very, very surprising to the markets, and you need to be able to snap call what it's going to likely do. And that is easier said than done, but it certainly has potential to capture some of those big moves. There's been plenty of times, Nick, I don't trade the 1 minute or the right away charts, but there are often times where some piece of data will come out and my entire thesis on something can change very quickly, and within, for me, 5, 10, 15 minutes I could be in a position in a new direction or closing out trades previously. So definitely very interesting to kind of make that distinction about surprises in the data. So yeah, thanks for breaking all that down for us.
Yeah, no problem. There's I don't know how much more time we have, but
We can go for a few more minutes if you're good.
okay, cool. Yeah. So
Yeah.
there's another way that I enter trades, and that's based on headlines.
Okay.
So it's basically like you were saying. I trade the volatility off of major changes in the market.
Mhm.
The way that I like to think about it is something happens in the real world that triggers the charts to want to move. Right? It triggers a change, an immediate change in sentiment from the market. Now, I don't have any headlines immediately pulled up for you guys here, but through financial juices, where I tend to get my headlines. Let's say something happened like, well, a couple weeks ago, the Hamas chief of staff was killed in an attack.
Mhm.
Right, it happened right at Asia market open around 6 p.m. Eastern Standard Time, and I didn't see this because I was out at the beach with my family, but it was the most recent prime example of a geopolitical tension headline hitting the markets, and then you see gold immediately pop to the upside, all USD immediately fall to the downside. So we enter a risk off environment almost immediately. And so I like to trade, I like to get involved and trade those headlines as well, because for me, the edge is very present when something in the real world happens and the markets are immediately reacting. I like to get in at that immediate reaction.
That's actually such an interesting point too, because the same kind of concept could probably be present in, if you were watching oil prices. I know that there was I can't remember exactly when this was, but there was a few weeks ago where James and Chandler, who are listening, there was something that happened in the Middle East, and I can't remember the exact instance, but oil just started drifting. I mean, it kind of looks like this, but way more intense. It was just straight up, and it was just every single 5 minute. It looked so regimented. It was unsuspecting kind of surprise news that changed the environment. And I don't really scalp or lower time frame trade, but I was looking at that. I was like, this is a pretty strong chance that you just continue to see this until the market kind of fully understands what it's working with. That rumor, that uncertainty can lead to substantial short-term trends that just rip in one direction for some time. So very true about kind of sporadic headline news and catching the short wave. There are certainly some fundamentals strategies that can be used on the lower time frames. And that sometimes bugs me, Nick, because sometimes people say that fundamentals are only good for long-term swing trading, when that is definitely not true. There are definitely strategies that thrive on the lower time frames using fundamentals as their kind of catalyst, obviously by what you're talking about and sharing today.
Absolutely. Absolutely. I'm searching through Financial Juice right now to try to find the headline, but I took a headline trade last week. It was
Mhm.
real quick on NQ actually.
Mm.
It was Apple was facing charges from the EU, if I can find it.
Yep.
I don't know if you remember
I
seeing
do
something
know
like
what you're
that.
talking about. It was like just concerns on well, I don't know if it was a privacy thing. I know that's kind of been an ongoing thing. Is I know they've been called for like monopolistic stuff or privacy stuff. There's been so many different kind of, and I know Europe is more strict with some of their um, privacy and protection stuff for consumers.
Right, right. So that headline, it was something brand new, and I'll have to search back through it and see if I can find it, and maybe go over it on the next stream. But
Mhm.
it was a real quick headline, and you saw NQ start to do it. We had been going bullish for most of the day. This was around the 2 p.m. hour, and we started to get a pullback. The market started to price in a little bit of uncertainty about Apple, and I just grabbed a quick NQ scalp to the downside. It was immediate. You know, you saw the market start to price in that new headline. Like I said, I don't have it pulled up, or else I'd show you immediately.
Yeah.
I think it was
problem.
on
We
Thursday
can
or
definitely
Friday,
save it for the next stream and come
Yeah.
back to it. Nick, just to wrap up here, I wanted to mention to everybody who's watching with us here live, I've followed Nick for a little bit on Instagram. I think you also have a YouTube channel as well. We've got the link to that. We've just dropped that here for everybody who's listening here. If you enjoyed listening to Nick and talk again, it's Nick squared here today. We got Trader Nick and Nick Phillips. It's a combo for the ages. If you guys are not already following him on Instagram and on YouTube, just drop the link to his YouTube channel right here. And then also, I think we had his Instagram a ways back. Maybe we can drop that one more time as well so people can find you there. Nick, I want to thank you for coming on the show, and hopefully we can have you back more often. I definitely, we're, as you mentioned earlier, we've got all these different people who kind of collectively build out what is the A1 Trading Show. It is a collaborative, kind of team effort thing that we do for traders looking to connect with real traders all over the world. So thank you for coming on and helping us out today.
Yeah, no problem. Thank you guys for having me.
All right. Well, Nick, thank you very much. We will see you back next time. And again, for everybody who's listening, make sure go follow, go support Nick. We want to make sure if we ask people to come on and spend some time with us, that we ensure that we, kind of return the favor and help them grow. So make sure go flood them with some DMs or something. We'd really appreciate that. And with that said, guys, we're going to wrap up the show here. But before I do go, I just want to remind you, remember our VIP discount sale is ending soon. It is currently 50% off. And if you're watching with us here live as we speak, that is 55% off. If you click the link being dropped in the chat, we mentioned it earlier. You can click it right here. Direct message. We've got a couple people on our staff standing by who can hook you up with that discount before it ends. And again, don't miss it. It's the biggest discount of the year. With that said, guys, we're going to wrap up the show. Thanks for tuning in. And thanks to all of our different hosts and people who came on the show. And thank you to you guys for watching and hanging out with us. Have a great rest of your day. We'll see you back tomorrow.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.
Yeehaw!